right direction.
The Canadian energy system is built integrated with the United States energy system. Those pipelines come to U.S. refineries that are tuned to refine that heavier, more viscous crude that Canada produces. I don't think we're going to see that change. As the president has said, this is a drug war. This is about concerns and security at our border. This is to get everyone's attention and focus on how can we reduce criminals and fentanyl and drugs that are a threat to American security coming in our borders. I think things are moving in a productive direction.
So it doesn't sound like you think that tariffs would ultimately occur.
I don't know what the future will bring there, but I know we've got very productive dialogues right now, and we're going to see a reduction in criminal activity coming across our borders.
Because I'm sure you have many friends in Canada, as do I, and they're angry about this. They're saying, well, you know what? If they want to tariff our oil, let's just ship it to Vancouver, and we're going to sell it overseas. I would call that the nuclear option. Do you see anything like that occurring if the tariffs were to occur, Mr. Secretary?
It's hard to build new pipeline capacity. Canada does have a West Coast pipeline, which is running today and exporting oil to Asia, but that's 10% or less than 10% of Canadian oil production.
Yeah.
But look, this president is aggressive. He doesn't like the status quo. He wants to change things and improve things. We had a lot of noise and sound and fury last time he was president about tariffs and inflation. Inflation averaged less than 2% in the 4 years he was president. Yeah. His agenda is to lower prices and better American lives. I don't see any reason to believe that's not going to happen.
The U.S. Energy Secretary there on tariffs and their implications for the U.S. energy industry and what it means for Canada, of course, and the Canadian alternatives. Right, coming up on this show, the French President Emmanuel Macron touts fresh investment into AI as the AI Action Summit kicks off in Paris. We've got Arjun and the rest of our team on the ground live coming up next from Paris.
Live ambitiously.
On a $100,000 US margin loan, Interactive Brokers charges just 5.83%. Do you know how much your broker charges? Fidelity and Schwab charge over 1.5 times as much. E-Trade is even higher. Move your account to Interactive Brokers and save at least $5,200, or much more if you're trading big bucks.
We speak to the world's most influential people.
I love what I do, and it means so much to me.
From celebrities.
When we took a break, I thought that was the end of it.
To the C-suite.
I started on the factory floor, and here I am 35 years later.
The economist and author Dambisa Moyo.
A lot of boards, many of the ones I serve on, went back to the drawing board to say, well, we need to do better here.
He turned a dream into a global brand.
Join the conversation on CNBC.
I started investing a little money for my dad, and I got bitten by the bug. In today's world, I would urge a lot of people to get financially savvy. Squawk Box and CNBC, it is my home. It's the greatest job in the world.
Frank Holland, Worldwide Exchange, CNBC.
A warm welcome to Squawk Box. I'm Steve Sedgwick, and these are your headlines. President Trump threatening 25% tariffs on all steel and aluminium imports, adding a new front to his trade war. Steelmakers falling, but not that aggressively. Let's be brutally honest about it. ThyssenKrupp was called down 9% at one stage, barely in negative territory now. Falling, though, excuse me, towards the bottom of the stock 600 in early trade. BP shares, though, take a look at this, are up over 8% now, jumping as activist Elliott Management reportedly builds up a stake, looking to push the oil giant to boost performance. The German Chancellor Olaf Scholz and election frontrunner Friedrich Merz go head-to-head in the first television debate, with the health of Europe's largest economy dominating the conversation.
I'm shocked at how you're interpreting the situation. We are now in the third year of a recession. This has never happened in Germany before.
We are better than others when it comes to exports. That's why we also feel to a greater extent what's happening in the global economy.
And Nokia naming the Intel AI chief Justin Hotard as its next CEO, with Pekka Lundmark set to stand down from the role at the end of March. Man gets off plane. Do you know, I don't think I can remember ever us taking live a vice president holding a small child coming off a US Air Force jet arriving in Paris. I mean, we normally only save these kind of pictures for the head of state, for whether it's Bush, Biden, Obama, Trump, of course, as well. But J.D. Vance has arrived at Orly Airport in Paris, and he's going to this AI Tech Summit as well. So that is breaking news, i.e. J.D. Vance is on his way to the AI Action Summit, which kicks off in Paris today. Arjun, well, he's already there in the warm, not outside in the rain anymore. And Arjun, well, actually, really interesting, isn't it, that the US Vice President arriving in Paris for this summit is actually very significant as well, because the US already has such an enormous lead compared with Europe as well. I wonder what his message is going to be.
Yeah, it'll be interesting, Steve. So there's a dinner tonight at the Elysee, which Macron is hosting. J.D. Vance could be there. Apparently, he's also having a working lunch with Macron tomorrow. I suspect a lot of the conversation is going to be about how the US and Europe work together on things like standards and guardrails and mitigating the risks around AI as well. But of course, these are two regions, the US and Europe, who are also in competition with each other. But there is a sense, obviously, from the US head that they want to lead the charge globally with AI. They want it to be a US-led AI world that we live in rather than a Chinese-led one. And I think that's also going to dominate the conversation, the geopolitics and how US and European companies can align in AI to sort of fend off the growing competition from China in this space as well, Steve.
Right, Arjun, I understand also you had some great sound from our previous guest. Why don't I throw to that sound, then you can backhand it?
I think the DeepSeek story primarily underlines that markets and investors are driven by emotions, not by rational thought. I do think DeepSeek is very interesting, right? And I think it challenges the paradigm that brute force scaling is the only way to kind of build better and better models. And I think that's very interesting. I think that sort of challenges the investment case maybe for Anthropic and OpenAI at like current valuations. But I still think that when you look at users of these technologies, all the workflows, I think when we look back in 3 months' time, I think 0.01% of those is going to be moved to DeepSeek from OpenAI and Anthropic. Now that said, what I think is interesting is all the innovation, open source models like DeepSeek, enables the ecosystem to do without necessarily having to work with OpenAI and Anthropic. So I think it's less about like moving market share away from like the big players. I think they'll be big companies and they'll be the winners in this space, but it will enable a lot of smaller companies to thrive and grow faster without kind of like the same limitations and guardrails around it. So I think in many ways it's very positive for the ecosystem.
That was Victor Appabelli, the CEO of Synthesia. They're talking about the impact of DeepSeek, which of course has been a hot topic here and will continue to be over the next few days. And his view is that, what DeepSeek has shown is that these models will get potentially more commoditized, and actually the value and focus is going to be very much on the application layer and how AI technologies and applications are implemented in business. Steve.
Super. Thank you. Well, hang around because we've got a great guest coming up next who says that companies should be bold on AI, or they risk being left behind. Jitu Patel is EVP and Chief Product Officer at Cisco. Jitu, really lovely to see you, sir. Thank you very much indeed for joining us. Well, my introduction there was companies need to be bold, otherwise they risk being left behind on AI. Let me get your comment on something that's just happened this morning. And you don't have to talk about the specific individuals involved, G2, but very interesting. Pekka Lundmark, who a man you know very well, the boss over at Nokia, is just being replaced, and there have been rumours for a long time, with an AI head from Intel. And that speaks volumes about your industry and every industry, about where the focus is going forward, doesn't it?
You know, it's a great question, and thank you for having me on the show. I think there's only two kinds of companies, Steve, that are going to be there in the world in the future. Ones that are going to have a high level of dexterity for AI, and others that are going to really struggle for relevance. So in my mind, you know, if you look at a common sentiment that you see right now, is every CEO, we actually did a study recently where every CEO is really excited about the possibilities of AI, but they don't really feel that prepared. So in fact, 97% of the CEOs we interviewed found that they were all really excited about AI, but didn't really, only 1.7 of them felt prepared.
Yeah, and that is fascinating. But there is also another concept in your world, in the world of technology, which is second mover advantage. And where I'm going with this, G2, is that those 97% of CEOs who don't know what they're doing on AI at the moment, is there an advantage in just holding off, being patient, seeing which technology, which standard, which form of product going forward is the best for them, and then moving? Are you being prepared to move rather than just going headfirst into a space where they don't know if they're spending their dollars is going to be spent wisely?
Well, you know, the way that we've actually seen it is the three big challenges that most companies have is they think about it as they're not prepared with infrastructure, they've got concerns on safety and security, and they feel like they have a skills gap. Now, if you take the skills gap, issue and go back to your question, the only way that you can get your learning curve up is actually jumping into the fray. You can't make sure that you sit on the sidelines and think your learning curve is going to go up. So I actually believe that starting with a project within your organizations immediately is the way to get yourself relevant in this market and really get an instinct for how this market's going to shape rather than waiting on the sidelines for too long.
G2, it's Arjun here at the AI Action Summit in Paris. I just wanted to get your take on business adoption. Just coming off the back of Davos a few weeks ago, a lot of the conversation was about we tried a lot of pilots in 2024, but we faced a lot of challenges. Things around data being siloed in organizations, therefore being unable to feed them into some of these AI applications. Also resistance to change within organizations, which I think links slightly to what you're talking there about skills as well. A lot of the talk also about how potentially 2025 sees more adoption of AI in businesses, but still these challenges will remain. How do you see enterprises at this point approaching artificial intelligence and adoption within the organizations?
Well, you know, Steve, if there's one thing you take away in 2025 with AI, it's that it's going to be a world of agents. And we're going to make sure that the level of automation that's going to be there is that the world's going to be an agentic way, kind of world as you move forward. And it's extremely important that organizations, as they're moving into this kind of agentic world, where automation is going to be a part and parcel of the way that we live, have the right level of dexterity in getting the infrastructure ready for AI, and making sure that safety and security aren't ignored. Because right now what ends up happening is safety and security get sacrificed for speed. And that's precisely the challenge that we want to help solve for organizations. In fact, we had a recent AI summit a couple of weeks ago, right before Davos, where we launched a product called AI Defense, where you can make sure that you can algorithmically figure out a way that you can have vulnerabilities identified in these AI models. And if you go back to what happened with DeepSeek recently, 100% of the tests that we did to go out and try to jailbreak the model succeeded. And this is the one time that 100% is not a good number. And if you look at some of the other models, those were down to 26%. So you've actually seen that DeepSeek has increased the risk of AI, and that's not just DeepSeek. You'll actually see many, many more models in the future that will start to emerge. And as that happens, safety and security as a risk is going to be a big one that we need to really go out and tackle effectively in society.
Jitha, what do you think happens to the model space as well? I know you mentioned some of the security concerns around DeepSeek, but ultimately what they've shown is that any model at any moment can be disrupted, something bigger or something better can come along, and maybe bigger models are not necessarily the way forward. So is this an area that just gets commoditized and really it's all about the applications? That's the line I've been hearing.
So the way that I think about this is it's actually going to be, I'm net positive on the way that the model world is evolving, because what you're starting to see is the cost curve is going to go down precipitously to train these models. And once you see the cost curve go down, there's going to be many, many models. This is a thesis that I've had for a long time, which is we're going to have a world with multi-models. But the only thing that I think has gotten even more amplified is rather than having tens of models, I think we're going to have thousands of models. And the challenge and the risk that you'll have is when you start having that many models and the proliferation of models, one, you're right, the value will start getting further up in the stack, but two, we're going to need to make sure that there's a common substrate of safety and security across the models. You can't just rely on the model providers to make sure that the applications are going to be safe and secure. So it's a really interesting dynamic where you'll start to see both the proliferation of models, but also the safety and security associated with those models need to be thought about much more deeply by companies that are going to implement these models.
So Jeetu, that means when you look at the tech landscape, it feels at the moment very difficult to make money being a model-only company. They're losing money, they're sinking billions of dollars into building infrastructure and training these models, and it feels like actually the status quo might not change much. It's the hyperscalers, it's the infrastructure companies that really will benefit going forward rather than those making the models.
But it depends, because these models will get more bespoke. I think we're in the very early innings, Steve. This is not something that's going to take, it's hard to predict right now whether model providers are not going to make any money. I think what you'll see is there will be a level of kind of, multiplication effect, and the distance between the number one and number two player is not going to be as large as it used to be maybe 2 years ago. But I still feel like there's enough innovation going on. For example, just like we talked about the DeepSeek effect, there's also the operator effect that happened. So if you look at what's being launched by OpenAI with deep research and what's been launched with Operator, there's a tremendous amount of innovation velocity that's still continuing to be had in these models. And I think it's too early to call that model providers aren't going to make money. I think what you will see, though, is there'll be many more model providers, and you will see the value the value moving up the stack.
But Jeetu, just to follow up on my colleague and everything you two have just been talking about DeepSeek and its impact as well, more model makers, more model builders, cheaper models as well. Add that to the current hype we're seeing around valuation around the likes of OpenAI, and it says to me that there is a bubble going to burst here, which will only benefit all those companies you're talking about, because everything will become commoditized. It always does. Everything will get cheaper. It always does. So why would one rush in now and amidst the hype make these kind of investments when actually, as again, back to my original point, if you sit back and let the dust settle, the hype will disappear, the commoditization will begin, the diffusion will be there, and actually it'll be a lot cheaper to adopt.
The one thing that most people don't realize is the genius of OpenAI is not just the model itself, but the applications that they built on the models. Large language models were around way before ChatGPT came out. But ChatGPT became that canonical application that got very, very widespread adoption. Now when you start thinking about agentic workflows, the operator is actually one of those other kind of watershed moments that you'll see where you're going to start to see a fair amount of compounding of value happen with the operator. Then you start seeing things like deep research that they just launched. And so there's a tremendous amount of up-the-stack value that's being added, and they're not just providing a model. Now, these things are expensive, and they actually do take some level of capacity to go out and invest in. But what I would say is there will be different models. There'll be innovative ideas that come out. They will actually go not just with the model, but also further up in the stack. And some of these will actually have different kind of capital requirements, but you will see the cost curve in general go down on training. And you'll actually see the cost curve in inferencing with things like test time compute, as you have these kind of models that do chain of thought reasoning, and they start thinking a little bit more before they respond to you. That'll actually increase the cost on the inferencing side. So I do think that there's going to be a fair amount of continued investment that'll be flowing into the space.
It's a great debate, and we really appreciate you finding time to speak to us, Jeetu, as well. We thoroughly enjoyed your conversation. Thank you, sir. Jeetu Patel, EVP and Chief Product Officer at Cisco, joining us from Amsterdam. And, of course, our very own Arjun joining us from Paris. Sylvia, these markets, where are we at?
So, Steve, despite the looming threat of potential new tariffs on Europe, the stock 600 is actually higher at the stage. We're up about 0.3%. And indeed, the investors continue to monitor the comments from Donald Trump, the U.S. president, saying over the weekend that there will be new tariffs imposed on steel and aluminium. Let's see how that announcement will take place and indeed who is going to be impacted by it. But nonetheless, the president did say that it would affect, quote, everybody. However, though, European investors are also focused on the earnings season that's underway. Let me show you the different sectors at the stage so we get a better idea of what's happening on the corporate front. Looking at oil and gas, we're up 1.4%. There's one stock in particular that is driving the momentum for the sector, and that is BP, with the reports that Elliott has, the activist investor, has joined the company, increased its stake, and indeed there's rumors they could be putting further pressure here on BP to actually deliver more action going forward. Real estate also up almost 0.9%. In terms of what's happening on the other side of the equation, let's get a check on the worst performing sectors. We have basic resources under pressure. We're down about almost 0.3%. Investors here also tracking the comments on tariffs on China, of course, but also the data we obtained from China, Steve, where in fact the CPI print for China came in at a 5-month high.
Thank you very much indeed for that, Sylvia. Okay, coming up in the final segment of Scorebox, the US president flags more trade tariffs, with some expected, yes, as soon as... Who's under that brolly? Is it? Oh, it's him. Oh, look at the map. Look at the map, everybody. What does it say? It says Gulf of America. He didn't take much time on that one, did he? We are expecting an announcement on tariffs as soon as today. We'll have the details and the fallout coming up next.
Today's Most Active Stocks Update is sponsored by Interactive Brokers. 150 markets, 33 countries, 27 currencies. Today's Most Active Stocks Update was sponsored by Interactive Brokers. Trade worldwide from a single unified platform.
ECB President Christine Lagarde talks policy.
I don't care how I'm remembered. What I care about is getting the job done.
Innovation.
I like to draw the line between the underlying technology, which is fascinating, and the assets that have gone up and down and up and down.
And the return of Trump.
I think what we need to do here in Europe is to be prepared.
All in the CNBC conversation.
Real money, real debate, real-time moves. Scott Wapner, live from the New York Stock Exchange. Halftime report, CNBC.
President Trump says he will impose a 25% tariff on all steel and aluminium imports today, on top of existing duties. Speaking, there's him under the brolly, I can confirm. There we go, that was him, next to the map of Gulf of America. Where's Gulf of America? I wonder if it's anywhere near Gulf of Mexico. Anyway, speaking to reporters on board Air Force One, Mr. Trump also said he would announce new tariffs on countries which restrict U.S. exports. Hold the line a second. Restrict U.S. exports. What does that mean? I think there could be a stunningly wide interpretation. It's back under the brolly. They've only got one picture, and that's him under the brolly, all next to the map. There you go. We've got both of them. Anyway, restrict US exports with details expected Tuesday or Wednesday. Let's listen in.
It won't affect everybody because there's some where we have similar tariffs. But the ones that are taking advantage of the United States, we're going to have it's reciprocity, it's reciprocal.
You can't make this stuff up. Who was it who said you've got to hold the picture with Florida, the panhandle on it, with the gold? You got to hold it. Someone's holding it. Two of them are holding it next to a press conference of him talking about tariffs. It's like, look, you see the fingers there. It's like, well, what relevance has a picture of Florida and the Gulf of America, as we now call it in the States? What difference is... Yeah, you got the brolly as well, yeah. Well, there he goes again, same tape. What relevance has that got? I don't know. It's all about optics, and I don't understand politics at all, obviously. But there you go, holding up a picture of Gulf America and talking about tariffs. How are they interrelated? I'm sure it's not that subtle, is it? Anyway, the European Commission said this morning that the tariffs would be unlawful. Well, how does it know? It hasn't even heard what they are yet. They've already said they're not going to respond until they know what they are. Commission said they would be unlawful and economically counterproductive, adding that it will aim to protect interests of European businesses. This after the French Foreign Minister, Jean-Noël Barrot, said that the tariff announcements are in no one's interests. Well, to be fair, we haven't had the tariff announcement yet. We've had the president talking about what potentially they would be doing as well. But on one hand, they're saying it's counterproductive, it's in no one's interest, and Europe respond robustly. On the other hand, saying, well, we can't say anything because we don't know what the tariff announcement is yet. Meanwhile, though, it's very interesting. The European steel makers, who you think will be under a lot of pressure, have barely moved. Can we get that ThyssenKrupp board up again? ThyssenKrupp was down 9% in pre-market, apparently, and now it is barely moving. It was down 0.4% last time I looked. There you go. It's still down 0.4%. So that is a very, very calm reaction, ladies and gentlemen, to what could be barely down. I mean, we call it flat now, Thyssen, wouldn't we, really? Anyway, let's move on from that because we'll get more details, I think, over the next 72 hours. Jobs report, Friday. What did you think? If you traded on up the 143,000 figure, you may have missed the point, because actually the revisions from the month before were actually quite strong as well. So you saw the US economy add 143,000 jobs in Jan. That was less than some expected, but the dip in unemployment rate to 4%. Well, that was not expected. And also average hourly earnings. That was greater than expected. As I say, also the revisions from the December payrolls report were to the upside. So net, I think it was quite a positive set of jobs data. Annual revisions, that was also going to be much pored over, showed job growth averaged 166,000 a month. That's only down 20,000 from the initial figure. Again, in advance of that, I was having some healthy debate with people about the importance of those annual revisions, and they weren't as low as that. People thought it might be far more dramatic. This week is busy, no doubt about it. We've got Jay Powell. He's got his semi-annual testimony, day one, coming up today. Plus, on Wednesday, we've got the inflation data, closely watched CPI print. Thursday, we'll bring PPI for January, which is the producer prices, alongside initial jobless claims. Retail sales are rounding off the week. Talking of retail sales, did you take a look at the credit figures for consumers in the States on Friday? And within that, the revolving credit figures. No sign whatsoever of Americans spending down their credit facilities, and certainly revolving credit, huge figure there as well. I think we're talking record numbers. It is set to be another key week of earnings across Europe as well. Let's take a look at some of the big names. Oil giant BP will report tomorrow. Well, hold the line there, ladies and gentlemen. Murray Auchincloss was already under a lot of pressure. But is there going to be a nod to Elliott in the numbers? I can tell you the answer is probably no, actually. But they have got, and just for your diary, a strategy announcement due on the 26th of February. That will probably be more pertinent for Elliott reaction. But if the CEO is taking any comment from analysts or conversations with the analysts or press somewhere, I don't think we're speaking to him, that's for sure, then it'd be interesting to see how much he's asked about Elliott there. Elsewhere, UniCredit, well, that's always fascinating. They're going to be big numbers, aren't they? Wednesday, SoftBank, Heineken. Thursday's a pretty big day as well. Barclays numbers due out, Commerzbank, and they're under enormous pressure to improve their return on tangible equity because of the attentions of André Ochel. Unilever, Siemens and Nestle all reporting at the tail end of next week. So vast amounts for us to digest. We shall do so on the remaining 4 episodes of Squawk Box this week. But in the meantime, Juliana Tattlebaum is raring to go. She is pumped and raring to go, yes, for the next hour. That is Street Science coming up next.
Our business is insanely data-driven. Understanding gene mutations, you need gigantic sets of data across the population. Because for us to uncover these differences, we need a lot of it, and we need it labeled and over a long time to see progressing of a disease, for example, right? It hopefully allows us to create that better understanding of a disease. And downstream, better understanding of the disease means eventually better drugs and hopefully cures. The unique piece of pharmaceuticals is that we look vertical and not horizontal. You find startups for almost every little piece of the value chain. It's really a steep vertical understanding all the way from the genome up to the disease, and then to stick sort of the cherry on the cake, that is the drug. We can approximate very well, and that is why we invested in quantum computing.
In the age of digital disruption, get fresh business perspectives on the fast-changing world of tech, innovation and startups from one place. CNBC.com/technology.
Can't miss reporting that impacts your money now. Be here when the opening bell rings. Squawk on the Street. CNBC.
Leong Wei-Ti speaks 14 languages fluently, and he's an AI engineer and linguist involved in developing the Sea Lion model.
We're going to look at an example about informal Indonesian. We're essentially asking the model, our friend is panicking, and he's working very hard every day. How can we help him best manage his work?
Yeah, but in that context, they're using an idiom, right?
Exactly.
And they're saying that his beard is always on fire.
Exactly. For this demo, we have 4 panels. So on the left, we have Sea Lion, our model.
Okay.
And we have 3 other models on the right. We can see that it didn't understand the phrase.
It took it literally,
exactly.
basically.
Like it's thinking about setting someone on fire.
Oh no. It's also in the same tone.
Exactly.
It's casual, informal, it's still colloquial, whereas this one is still sticking to like a more formal kind of response.
Exactly. And that's really what we want to achieve as well.
With everything what now happened in the United States, that is certainly a wake-up call. And this wake-up call now, still we need to see proof, but I hope now also Europe comes closer together and we really form a union.
I do believe we need a really fresh start if it comes to regulations. Don't start fine-tuning what we have. It's not that we're against it. We know that we have to move our agenda regarding critical resources or energy consumption. That's all fine, make it greener. But it has to be in a way that we do not slow down business.
German businesses do complain as one of the key items to us as being overburdened by too much reporting, too much red tape. And this is something we have to solve domestically, so we can't only finger point to Brussels, but we have to also join forces in Europe to reduce the reporting requirements.
Good morning. Happy Monday, everybody, and welcome to Street Signs. I'm Juliana Tattlebaum, and these are your headlines. President Trump threatens 25% tariffs on all steel and aluminum imports, adding a new front to his trade war. Steel makers falling toward the bottom of the stock 600 in early trade. BP shares jump as activist Elliott Management reportedly builds up a stake, looking to push the oil giant to boost performance. German Chancellor Olaf Scholz and election frontrunner Friedrich Merz go head-to-head in the first television debate, with the health of Europe's largest economy dominating the conversation.
I'm shocked at how you're interpreting the situation. We are now in the third year of a recession. This has never happened in Germany before.
We are better than others when it comes to exports. That's why we also feel to a greater extent what's happening in the global economy.
French President Emmanuel Macron pledges more than 100 billion euros worth of AI investments as top names in the private and public sector descend on Paris for the AI Action Summit. We'll hear from Meredith Whittaker, President of Signal, this hour.
A very good morning to you and welcome to the program. Another turn in the trade war is on the agenda this morning. President Trump says he will impose a 25% tariff on all steel and aluminum imports today on top of existing duties. Speaking to reporters on board Air Force One, Trump also said he would announce new tariffs on countries which restrict U.S. exports, with details expected Tuesday or Wednesday.
It won't affect everybody because there's some where we have similar tariffs. But the ones that are taking advantage of the United States, we're going to have it's reciprocity, it's reciprocal.
Here's a look for you at how the European metals names are reacting to the news. We are trading lower, but fairly muted in terms of the magnitude of the sell-off we're seeing this morning. So investors, to some extent, taking this next turn in the trade war in stride. ThyssenKrupp down about 0.7%. Salzgitter down more than 1%. You are seeing a bit more of a pullback in ArcelorMittal, down 2.8%. Norsk Hydro down 0.6%. The European Commission said this morning that the tariffs would be unlawful and economically counterproductive, adding it will aim to protect the interests of European businesses. This after French Foreign Minister Jean-Noël Barrot said the tariff announcements are in no one's interest. Well, Sylvia has been working hard this morning looking into the European response. Sylvia, tell us more about how Europe views these new tariffs and what the response may be from the European side.
So perhaps a bit of context. This is not the first time we're hearing Donald Trump potentially putting tariffs on European steel and aluminium. Back in 2018, when he was doing his first mandate as President of the United States, he imposed steel and aluminium tariffs. After a lot of back and forth, and of course with the Biden administration, these tariffs were actually on pause until March 2025. So for the time being, these tariffs were not, implemented. However, we heard from the president over the weekend saying that there will be new tariffs announced today on steel and aluminium, and these would, quote, affect everybody. So the European Union has already, since the re-election of Donald Trump, been working to protect themselves in case there were tariffs on European goods. So it wouldn't be really a surprise for them if this were to be announced also against the European Union later today. As a result, though, I contacted the European Commission, and a spokesperson said this morning that they see no justification for the imposition of tariffs on its exports, and that they will react to protect European businesses. An important comment over the weekend, Juliana, was from the German Chancellor, actually, Olaf Scholz, suggesting that the European Union could be in a position to retaliate within an hour. That would be a very fast response, but it would highlight that they are prepared for this eventuality. They have been doing so for a long time, really. So let's see whether this announcement is going to come through, and indeed what sort of tariffs the European Union could announce in response. But back in 2018, we saw the European Union imposing tariffs, for instance, involving some of the American whiskey and bourbon, the jeans, motorcycles as well. So it could be a similar list that we would get this time around. But of course, it will also depend on the amounts that Donald Trump announces later today. So all eyes at the stage on what Trump is going to say.
Well, it also seems really unclear at this stage just how much of a tactic these tariffs are versus, whether these are the end game for President Trump and whether he's just trying to bring parties like the European Union to the negotiating table, or parties like China, which to date that hasn't been the case. They actually moved ahead with the tariffs. China retaliated, and we haven't seen any negotiating happen.
But when we look at the Canada and Mexico tariffs, indeed, those are on hold for the time being. So that suggests that there's perhaps room for negotiation. From a European perspective, though, everyone is kind of expecting that they will have to buy more American energy. Donald Trump already suggested that. The President of the European Commission suggested that. So that could be, a path for some sort of easing in the trade conflict between the U.S. and the EU. But for the time being, we don't actually know how this is going to unfold because Donald Trump has not yet gone as far as imposing tariffs on the EU. But the continent is on alert. They are ready to take action the moment those tariffs are announced.
And as usual, the question of unity, I'm sure we front and center
100%.
and how long the European Union can remain united in its response to the U.S. Well, Sylvia, thanks for getting response early on. Let's get back to markets and check out the reaction not only to the new tariffs that have been announced by the president, but also to the movements of last week. We saw the Stock 600 advance 0.6% last week. Its 7th positive week in a row. So we are coming off of a strong performance for European equities. This morning, we're up another 1/3%. So markets generally shrugging off the tariff threat and the economic impact from more potential tariffs. In terms of the regions in Europe, here's the split this morning in the early hours of trade. You've got FTSE 100 in the UK up 0.5%. The Xetra DAX lagging a little bit. The CAC 40 up about 0.2%. The FTSE MIB up about 0.2 as well. So fairly contained, but moves to the upside. In terms of U.S. futures, here's how Wall Street is looking. We have green across the board on Wall Street as well. The NASDAQ and the Dow looking to add about 103 points apiece. The S&P 500 looking to gain about 18 points. We did see U.S. stocks close out the week on the back foot and end lower for the week overall, but fairly muted in terms of the magnitude. Again, especially in the context of these new tariffs coming into play and the threat of more tariffs, the markets have actually been pretty calm. So let's talk to Daniel Morris more about why that is. Chief Market Strategist at BNP Paribas Asset Management. Daniel, great to see you. Wonderful to have you on Street Signs again. So my question to you is why markets have reacted relatively calmly to what is a pretty large economic threat from these tariffs?
Well, I don't know if I guess evidently the market isn't seeing it yet as a large economic threat. I mean, the potential we all appreciate is there. But what we've seen so far is kind of like a parallel track. So on one hand, clearly seeing Trump using tariffs as a negotiating tactic, so Colombia, Mexico, Canada, where the tariffs were a means to an end as opposed to what he really wanted to do. Now, with the steel and aluminum tariffs, we understand there may be something different here. So I think the market has learned, if you will, to differentiate if it can.
And why do you say this could be something different?
Well, here, if you want to think about what the justification is going to be, and in this area, the U.S. certainly is not alone in that if you see steel and aluminum production as a strategic necessity, which at least is justifiable, then having tariffs to protect an industry where you do want to have that capacity domestically, is understandable, as opposed to, say, 10%, 25% on absolutely everything. So that would be where the market certainly would get worried. I think we're quite a ways from that right now.
And in terms of the reaction in global markets versus U.S. markets, it's been quite interesting looking at the performance of the likes of Europe year to date. We've got the Stock 600 up 6% on the year. It's outperformed the S&P 500 in dollar terms. Does that make sense to you that Europe would be outperforming the U.S.? And if yes, do you think that outperformance is sustainable?
Well, I think at least European investors may need to enjoy it while it lasts, because if you do step back and look at what do you think the trends are going to be over the next, let's say, 6 months, let's take the fourth quarter earnings season. It's been positive for Europe, but U.S., much, much higher, which is historically the case. Earnings surprise is stronger in the U.S. than in Europe. So if fundamentally earnings are what drive equity markets, you just don't see the same momentum. If you look at earnings revisions, again, more supportive for the U.S. If you do get tariffs, that's better for the U.S. So for now, maybe it really was so much of the bad news was priced in for Europe. That said, if you look at the economic data that was released last week, almost all of it disappointed in Europe. So it doesn't really feel like, even with this performance of the market, that we're at a turning point. We'll have to wait and see.
In terms of the U.S. market then, if there is a lot of momentum in the U.S.'s favor that's not present in the European market, it also feels like there's a lot more to lose in the U.S. And from a valuation perspective, if you look back at Trump 1.0, we were coming into the administration in a much worse place from a stock market perspective. The S&P was up only modestly in the period leading up to the Trump's first presidency. In this case, the S&P 500 was up 50% in the last 2 years. Valuations are a lot higher than they were. So you've got a lot further to fall this time round. Does the same playbook work still?
Well, certainly not the same playbook. I mean, you're right. It's a very, very different world than what we had last time. I think, though, if we try to nonetheless look at where are we today and what do you expect in the future, so you're right. It comes down to valuations and comes down to earnings. So if you think of the S&P, but think of it as two different markets, if you will. So NASDAQ and Russell value. So for NASDAQ earnings, I think people are still pretty optimistic. I think valuations are moderate, so we really don't see any big risk there. For value stocks, earnings also fine. Valuations perhaps a bit higher. So certainly not to suggest there's not some vulnerability. If we do get a negative surprise, because it's such a popular investment right now, you would expect an outsized reaction. And as it happens, we've pulled back our overweight to the U.S. and are now kind of neutral on equities overall in terms of the regions, kind of reflecting this fact that we've done quite well. Okay. You're starting to get a bit more risk. Let's wait and see how things evolve.
So where are you bullish then?
Right at this point, nowhere. So thinking that you're going to see a broadening, and this should be seen in a positive way, a broadening of the equity momentum. So as you mentioned, Europe doing better, not clear, actually having that U.S. overweight hasn't worked. So we want to kind of have that broader exposure. We see potential for some of these lagging markets to pick up before deciding, okay, it's more clear where we think the next big leg is going to be.
Daniel, thank you. Maybe you'll be more bullish next time you're on set,
so.
But I appreciate the candid answer, and if that's what it is, not so bullish anywhere, then that's okay. Daniel Morris, Chief Market Strategist at BNP Paribas Asset Management. Activist hedge fund Elliott has reportedly built a large stake in BP. That's according to multiple sources, reporting that it will push the British oil giant to make transformative changes to boost performance and buoy its share price, which lags behind rivals such as Exxon and Shell. The size of the stake is unknown, and Elliott and BP have declined to comment. Now, earnings are set to continue another busy week across Europe. We've got oil giant BP reporting tomorrow. It'll be interesting to see whether they do comment on reports of Elliott's stake. We've also got results from UniCredit and Kering. And then on Wednesday, we'll hear from tech investment giant SoftBank and brewer Heineken. Thursday will bring us results from Barclays, Siemens, and Commerzbank. Following last week's job report, attention now turns to the week ahead with the closely watched CPI print on Wednesday. We will also get Fed Chair Jerome Powell's testimony in the Capitol on Tuesday, and Thursday will then bring January's PPI reading alongside initial jobless claims, with retail sales rounding off the week on Friday. Now, I'll be paying particular attention to Jay Powell's testimony to Congress. Always interesting to get his take on the state of the U.S. economy. Now, in terms of the market reaction to these new tariffs that President Trump put forward yesterday, here's a look for you at United States Steel Corp. You've got an extended trade, U.S. Steel higher pre-market as Nippon Moll's bold buyout revision, Trump pledging tariffs. That is one to watch ahead of the U.S. market open. Now, coming up on the show, Olaf Scholz and Friedrich Merz clash on Trump, debt, and NATO in their first televised debate as the country's election campaign enters its final fortnight. We'll bring you the latest next.
CNBC. Live ambitiously. Want to jumpstart your side hustle? Learn the skills to earn passive income online with CNBC Make It's new online course. Expert advice, real-life success stories. Register right now at cnbcmakeit.com/passive income.
When I did my master's, I was having a concentration in the area of artificial intelligence.
So you're secretly a tech geek.
I wouldn't call myself a geek, but I certainly am very interested in technology.
On the next Managing Asia, an exclusive interview with Singapore Airlines Goh Chun Pong.
I think the most stressful time really during the pandemic was the initial period when we're trying to raise funds.
Looking back, would you have done anything differently? More of my interview on the next Managing Asia.
My ambition is to get the story and to help the viewer connect the dots, to understand the context so that we, all of us, can actually make our own judgments. Oh, I love what I do. I can't imagine doing anything else.
Before they talk to Wall Street, they talk to John Ford and Morgan Brandt. Closing bell overtime.
Welcome back to the program. German Chancellor Olaf Scholz and his election rival Friedrich Merz went head-to-head Sunday evening in the first televised debate ahead of this month's election, with the pair clashing on migration and the far-right alternative for Germany, energy policy, and the future of the German economy. Annette joins us now with more on this debate. Annette, so looking at the polls heading into this debate, Olaf Scholz's Social Democratic Party polling in third place, pretty far behind Friedrich Merz, and I think a lot were looking at this debate as the last opportunity for Olaf Scholz to potentially change the shape of the race. Has anything materially changed as a result of this election debate?
No, because what would have needed, what would he have needed is a clear victory in that debate. So, and that hasn't happened. Olaf Scholz came out probably at par with Friedrich Merz, a little bit ahead in the first poll conducted by the public broadcaster ZDF, but he didn't really make a mark, especially in favor of his party. So what happened is that they actually exchanged more or less common views about migration, the economy, energy policy, but there was nothing really surprising in all of that. Of course, they don't agree on the state of the economy, while Olaf Scholz is insisting that Germany is very strong and has a lot of potential. Friedrich Merz, of course, is pointing out that Germany is lacking behind and it's losing competitiveness, because perhaps we listen in, or it's a short picture of how those two candidates actually have a very different take on the economy.
We had more to fight against with rising industry costs and energy prices. We in Germany must import coal, gas and oil, the prices of which exploded unbelievably, and our economy felt this much more. And we don't need to go into how another government, named Mr. Altmaier as economy minister and Miss Merkel, perhaps didn't do all they could have to make us more independent. Yes, I was also in that government. I'm not denying that. But this was the starting point for the situation we now find ourselves in. And I do not find it okay when you pretend this is something that we can simply just shake off.
I'm shocked at how you're interpreting the situation. We are now in the third year of a recession. This has never happened in Germany before. We have 3 million unemployed, with the number rising, and 700,000 open positions that can't be filled. We're seeing a wave of insolvencies, the likes of which we haven't seen for 15 years. 50,000 companies went under during your term in office, around half of which in the last year alone. These numbers are only rising, and you're talking like we're not going through a deindustrialization. What's the loss of 300,000 jobs? This is deindustrialization.
So I think never before we have seen industrial associations going and protesting against the economic policy of a government. That has happened just towards the end of January in Berlin and all across the country. So I think the sense of urgency is very high among business leaders, Mittelstand companies, that something has to change in order to be able to perform as a country, and also to attract investments in the country, because that's one major other issue. We have seen a almost record outflow of capital capital in the last 3 years, and investments also of German corporates are not taking place inside Germany but outside the country. In another part of that debate, they've been, of course, clashing on migration, with Friedrich Merz is being very tough on illegal migration, and Olaf Scholz insisting they've already done a lot in the last 3 years. So you see, but going into the polls, nothing materially seems to have changed. Friedrich Merz sits firmly at roughly 30%, his party. The SPD is far behind at roughly 16%, and between them sits the AfD for the first time, of more than 20% of people in the whole of Germany are most likely going to vote for the far-right or populist party Alternative for Germany.
Annetta, thank you for breaking down the debate last night. Do stay with us for this next guest. David Deissner, Managing Director of Foundation for Family Businesses and Politics. David, thank you for being with us to help us digest the debate, but also frame what the business environment is like in Germany right now. David, Friedrich Merz says he's very well aware of business leaders' concerns and what the economic issues are in the country. He says that the country is suffocating with red tape, that he's prepared to cut taxes, cut electricity taxes, corporate taxes, among other things. Are you confident, though, that if elected, he will be able to deliver on these election promises?
Well, I mean, we as an organization, of course, we do not make any recommendations what people should vote for, but, it wouldn't come as a surprise that German businesses are, closer to the positions of the Christian Democrats in Germany and also the Liberal Party. And of course, we saw, very much welcome Friedrich Merz's very clear statement that we need a correction in the kind of political framework conditions, that we need a correction of the course of the government, because as you just pointed out, we have serious problems in Germany. We have a very high unemployment rate at the moment. We have the third year of recession now in a row with no end in sight. We have bankruptcies up 25% compared to last year. So yes, there's a certain degree of confidence that with a change of government towards a more economically friendly policy, we will see improvements. And we need these improvements very, very urgently, particularly for the family businesses here in Germany, which make actually up to 90% of all businesses in Germany. So it's very much an SME-based economy, and we need better conditions, and it has to make sense again for people to do business in Germany, and they are faced with a lot of problems at the moment.
David, you raise an important stat there that family businesses make up 90% of companies in the private sector and provide almost 60% of jobs. So clearly these businesses are critical to getting the German economy going again. What specifically do the family businesses that you represent need to see to begin investing in the country again, and critically to begin hiring again?
Well, first of all, we really see that deindustrialization is already a fact. I mean, we actually conducted a survey recently, and 76% of all family businesses in Germany said that they will reduce investments in Germany within the next 5 years. And the main reasons that we hear are, of course, red tape. The regulatory burden for German companies are very, very high. Also, when you compare Germany to other OECD countries, we have very, very high energy costs. The price for electricity is twice as high as it is, for example, in the United States. Many of the companies also criticize that they do not have any clarity on where the prices will be going. We saw, in the so-called traffic light coalition of the past 3 years, a lot of corrections in the course of energy policy. We didn't really see an improvement when it comes to red tape. On the very contrary, we saw that even more, regulatory burden was imposed on the German economy, not only through German regulation, as for example our German Supply Chain Act, which kind of preempted the European regulation. So we need, really a serious step towards less government control, less, reporting duties that are a serious burden at the moment for the German companies.
David, let me jump in here. So provided there will be tax cuts for corporates and less regulation, I mean, Friedrich Merz's hands will also be like at least semi-tied when it comes because of the coalition building. But provided that kind of is happening, will investment come back to Germany from the Mittelstands company?
Well, you know, investment must come back. You just mentioned taxes. We actually have, you know, again, when compared to other OECD countries, very, very high taxes, particularly for companies. We are at, you know, really at the very top of tax burden, and you know that really has to change. Of course, there is confidence that investments will come back. We still have, you know, skilled labor. We have a lot of high-end engineering, you know, the so-called hidden champions in Germany, and there is, of course, a lot of potential. But again, the conditions have to improve significantly, and the federal government must prioritize ensuring that also the European Commission, you know, is not only de-escalating trade conflicts that we are faced with at the moment, but that we also have a stronger voice in Europe when it comes to expressing German interests. What we saw in previous years was more kind of German gold plating. So Germany tried to kind of preempt European legislation, and in many cases made it even more complex for German companies, you know, when it comes to, for example, supply chain regulation. Yeah, again, taxation is certainly a huge issue for German companies. And what was disturbing, of course, for many people doing business in Germany is that the SPD, for example, was now claiming higher taxes, was also, you know, flirting with the idea of increasing inheritance tax, which is a real threat for the substance of family-owned businesses, because they would have to, you know, pay these inheritance tax with each change of a generation. So more or less every 30 years you would have an inheritance tax, which is a substantial threat and a risk for German businesses.
David, thank you so much for joining us. David Deisner, Managing Director, Foundation for Family Businesses and Politics. Annetta, thank you as well. Still ahead in the show, more from the AI Action Summit in Paris. Arjun, what's coming up?
Well, look, while AI has been advancing rapidly, there may be implications for our privacy. That's the view of my next guest, Meredith Whittaker, the president of Signal, who will join me right after this break. Stay tuned.
In addition to hedge funds and registered advisors, Interactive Brokers also serves individual investors. We give you all the tools and technology we built for our institutional clients for free. Let Interactive Brokers assist you with your market goals. The best informed investors choose Interactive Brokers.
Good money.
Everything seemed legit until it wasn't.
Good times.
The lavish lifestyle, the houses that they're used to.
Is never enough.
Someone who has a goofy social media presence could be laundering $4.5 billion worth of Bitcoin.
Fame, fortune, and fraud.
His stories were so good, they've all fell for them.
I believe in getting justice.
American Greed on CNBC.
Ambition is in my DNA. My grandparents came over from China to give their children a better life. They opened up a laundry in Buffalo, New York. They raised 5 kids, and they sent all 5 children to college. They achieved their American dream, so I can have mine. It's a privilege to be able to have the platform to help viewers out there make better investment choices so that they can have a better life, so they can achieve their American dream. That's what ambition is all about.
Kelly Evans, The Exchange, CNBC.
Welcome back to Street Signs. I'm Juliana Tattlebaum, and these are your headlines this morning. President Trump threatens 25% tariffs on all steel and aluminum imports, adding a new front to his trade war. Steelmakers falling toward the bottom of the stock 600 in early trade. BP shares jump as activist in Elliott Management reportedly builds up a stake, looking to push the oil giant to boost performance. German Chancellor Olaf Scholz and election frontrunner Friedrich Merz go head-to-head in the first television debate, with the health of Europe's largest economy dominating the conversation.
I'm shocked at how you're interpreting the situation. We are now in the third year of a recession. This has never happened in Germany before.
We are better than others when it comes to exports. That's why we also feel to a greater extent what's happening in the global economy.
And French President Emmanuel Macron pledges more than 100 billion euros worth of AI investment as top names in the public and private sector descend on Paris for the AI Action Summit. We'll hear from the president of Signal, Meredith Whitaker, in a few moments' time. We are 1.5 hours into trade on a fresh trading week. Let's take a look at how European equities are faring. We are coming off of 7 positive weeks in a row for European stocks, and this morning we're building on those gains. The main benchmark up 0.33%, and we are seeing the majority of stocks trade higher, as you can see there. In terms of the sector breakdown, here are the outperformers in Europe this morning. You've got in terms of markets, you got the FTSE 100 up 0.4%, the Xetra DAX and the CAC 40 up about 10 basis points or so, and the FTSE up 0.2%. In terms of the sector gainers, those that are leading the charge this morning, you have got real estate up in the leading position, more than 1% higher, telcos, oil and gas, and retail. Now on the downside this morning, here's a look at the laggards in Europe. You've got basic resources down 1/3%. So investors are selling some of those basic resources names, steelmakers in particular, in response to these new tariffs on steel and aluminum imports from the Trump administration, but fairly modest in terms of the magnitude of the selling that we're seeing. Construction and materials also trading lower this morning, and healthcare. Other than that, every sector is higher. Now, IAG shares are in focus in the travel and leisure sector, and that's part of why that basket is among the underperformers this morning. IAG is down after Goldman Sachs downgraded its rating on the stock to neutral from buy. In the telco space, Nokia has named Justin Hotard as its new CEO, replacing Pekka Lundmark. Hotard is currently at Intel and leads the data center and AI unit, and will take up the new position in April. Outgoing CEO Pekka Lundmark spoke to Squawk Box just a few weeks ago and was asked about Nokia's succession plans.
We are doing succession planning pretty much continuously for all board roles and management team roles as well. And in that succession planning, we are identifying both internal and external candidates, and we are doing some of that work with external partners as well. I don't know if any of that would be behind those rumors, but what is important is that all of this is done in full cooperation between the board and management.
TSMC says it expects to see its first quarter revenue closer to the lower end of its guidance, but reiterated its full year guidance. The chipmaker also said it is making every effort to recover lost production after an earthquake last month, which impacted several factories. Tech giants are expected to spend more than $300 billion on AI this year as they race to keep up with demand. Amazon, Google, and Microsoft have all pledged to increase AI spending in the upcoming quarters, targeting growth particularly in their cloud business. Meanwhile, Meta CEO Mark Zuckerberg said 2025 would be a defining year for AI. French President Emmanuel Macron has announced 109 billion euros worth of private sector investment into AI over the coming years. Speaking ahead of the AI Action Summit in Paris, Macron said Europe needed to step up its AI spend in order to end its reliance on U.S. and Chinese innovation. DeepSeek's AI model could be the best work out of China, but the hype is exaggerated. That's according to Google DeepMind's CEO, Demi Hassabisi, is speaking at a Google event in Paris. He said the AI model can do extremely good engineering and changes things on a geopolitical scale, but from a technology point of view, did not represent a meaningful change. Well, Arjun is on the ground in Paris. He's been at the AI summit as things ramp up there. Arjun, what a guest list at this summit. It feels as though Macron is trying to put Europe on the map and trying to push this view that Europe can keep up with the likes of the US and China. How's he doing?
And that's certainly a big theme here. Europe really want to make a bit of noise, shout about the companies it has, the leadership it's taking in certain areas of AI. But of course, there's tensions between the US, between China, and also between Europe as well. So Europe wants to just try to cement its position here. That's one of the themes happening on the geopolitical scale, but also how these countries all work together around risks, around mitigating those risks, and forming some sort of framework. And finally, of course, DeepSeek on everyone's lips here as well. And look, I want to get into all of these topics with my guest now at this hour, Meredith Whittaker, the president of Signal. Meredith, I just want to first kick off the conversation with DeepSeek, just because it's a huge topic in the world of AI. What has it done to assumptions around bigger is better for models, around infrastructure spending, power, energy consumption, all of these things that you're thinking about?
Well, look, DeepSeek was a masterful gambit in diplomacy, or lack thereof, perhaps, in the AI brinksmanship that is currently happening between the U.S. and China, where the hyperscalers that provide the infrastructure for the world's tech ecosystem reside. So I think it's interesting from that perspective. Now, I think we need to put that in historical context before we make too many leaps, however. Every moment in the deep learning revolution that we're in now has in some sense been defined by efficiency gains. So you can look back to 2012 when a paper called AlexNet proved that we could use fewer chips, these gaming chips, to develop huge models. We can look at 2017 when the Transformers architecture did a similar thing for deep learning architectures. And what happened after each one of these efficiency gains was not a turn to smaller models, to more efficient, to spending the same amount of, to spending less money to build the same size model. It was a turn toward larger models, saying now that we can do this more cheaply, now that we don't have to use as much compute, how about we do it bigger? How about we spend the same amount of money to build bigger and bigger models and continue this race for scale that importantly ultimately accrues power to the companies that have chips, have the data, and have the market access. So this is not something that's going to disrupt the concentration of power or the geopolitical balance at this stage. And I think we have to keep our eye on the ball there and recognize that it's really this bigger is better paradigm that is not reduced through efficiency gains historically that is driving this concentration, and that is really what we should be looking at here. And that's fascinating, because when we've spoken in the past, you flagged concerns about the concentration of power, about these huge tech giants who have the resource to be able to train these huge models, and there's very few of them in this world. Has open source at all changed the game? Because that's really what we've seen from DeepSeek and now startups as well. Is that going any way to disrupt any of this concentration of power? Well, open source provides transparency. So you can see, depending on how open it is, and that's a whole different conversation, you can see how it was trained. You can perhaps look at the weights if it's a more extensive open source model. You can reuse it. You can fine tune on top of it. But open source does not open source the vast amounts of compute necessary to train a base model. It does not open source the market access necessary to commercialize a model, and it does not, importantly, open source the vast quantities of data required for training, for inference, and for the actual creation and development and maintenance of these models. So it allows transparency, it allows extensibility, it allows us to reuse models, and those can all be good. But it in no way actually perturbs the concentration of power that has accrued to the large tech companies that have all of those ingredients. Now, a topic that hasn't received a lot of attention but should do is our privacy in the world of AI. That's what you're here to talk about. So what exactly right now are you focusing on? What are some of the concerns you have with the way
the rapid development of these models and the way consumers are using these AI services?
Well, I'm the president of Signal, so all day, every day, every year, I think about privacy, and I think about how fundamental privacy is to so much that we take for granted, whether it's democracy, journalism, confidential conversations in the boardroom, whether it is human rights work or military communications, intelligence communications, you name it. Signal is the nervous system for private communications across the globe, and we take this very seriously. We don't think there's a more fundamental right, and frankly, I don't think there's cooler tech in the world than Signal right now, but we do have concerns with the rapid drive to incorporate AI into everything, good, bad, or indifferent, right? And you're seeing things like AI moving onto the device. You're seeing a hunger for data, because let's be real, AI can't make a determination. It can't give you an answer. It can't classify something. It can't tell you what's in your photo. It can't do anything without access to your data. And it's access to the data and the sloppiness that we're seeing as AI gets integrated into sensitive environments, sensitive contexts, that is really concerning to Signal, and something that we are pushing hard against and trying to sound the alarm about here, because we lose privacy, we lose all of those fundamental rights.
So how do you balance that, Meredith? Because, you know, those who are obviously saying AI can lead to productivity gains, can boost economic growth, etc., and help out all of those things. How do you balance that with integrating AI into society, but in a way that protects privacy? It feels like a very difficult balance.
Well, I don't know that we're balancing two equally weighted substances, right? Of course there are actors, of course there are the hyperscalers, of course there are those who've spent trillions of dollars in CapEx and are really counting on a return on their investment, who will make a lot of claims about what AI can do, and some of them will be right. But fundamentally, we can't have economic productivity. We can't have functional governance. We can't have journalism, which is the fourth estate of a democratic society. We can't have human rights work. We can't challenge institutions. We can't whistleblow. We can't have military command and control without privacy. So you undermine that right. I don't think we're looking at a world where the artifice that supports these AI claims exists anymore. And we have to be real about that. You know, hype is great for your board, but when we're talking about fundamental rights, when we're talking about the future of our institutions, we can't ride on hype. We need to be real and concrete and recognize that we must protect privacy. We must ensure that Signal and the nervous system of private communication persists in this moment especially.
Meredith, we've got a few seconds. Just very quickly, not asking for a silver bullet, but we have India, China, US, Europe, all represented here, and other countries as well. Does this require a global solution, regulation, a framework? What is the answer in your view?
Those are really big words. What it requires is us to come to the table, be very real and very practical about what we're talking about. We're talking about a technology that relies on vast infrastructure, vast data, and that can, without proper guardrails and democratic governance, lead to significant concentration of power that could be deleterious for the world at large.
Meredith, thank you so much for your insight and time and shining a light on privacy in the age of AI. That was Meredith Whittaker there, the president of Signal, with some very fascinating insight into a topic we probably haven't paid enough attention to as of yet. Plenty more from the AI Summit over the next few days, and of course you can read more on CNBC.com where I've written an article about Demis Hassabis' views on DeepSeek and what it means for the broader AI model. For now, Juliana, back to you.
Arj, thank you for bringing us that fascinating interview, and I look forward to your continued coverage out of Paris. Now coming up on this program, Philadelphia celebrates as the Eagles secure a dominant Super Bowl win. We'll get more reaction next.
CNBC. Live ambitiously.
We empower those who act, those who see the correlation between predictability and probability, those who manage risk by anticipating each movement, flawless execution, timing, and accuracy. Identify the goal, match power with precision, reach new heights. CME Group, where risk meets opportunity.
Ambition doesn't always look like you think it might look. I can remember reading The Economist on my lacrosse bus trips in college. I've just always been super fascinated by what's happening in financial markets and what is that telling us about where the world is going. I want to democratize access to that high-level information and help explain to every single person out there watching why what's happening in these complex markets matters for their lives today and in the future. That's what drives me. I love being part of this.
Squawk on the Street, CNBC.
Welcome back to Street Signs. Let's take a look at some live shots from the Superdome in New Orleans, which last night played host to Super Bowl 59. The Philadelphia Eagles secured a dominant victory over the Kansas City Chiefs, denying the Chiefs a third straight Vince Lombardi trophy in a 40-22 win. Just hours ago, we saw celebrating Eagles fans pour out of the stadium after that victory, the franchise's first since it won the big game 7 years ago. In Kansas City, watch party crowds started to thin out in the second half of the match as their defeat became clear. Very sad images. But there were very different scenes in Philadelphia, with celebrations across the city continuing late into the night. Fortunately for us, we've got Brenna Weik standing by from NBC's WCAU in Philadelphia. Brenna, this morning I woke up and I had to wade through so many celebrity shots on all of my social media feeds before I even found out what the result was from the Super Bowl. Tell us about the celebrations that have been going on in Philadelphia.
Oh my goodness, people are just so excited. It has been such a fun night throughout Philadelphia. It seems like most people have cleared out here. We are on Market, which is a busy road here in Center City, Philadelphia. There's a lot of cleanup left to do, as you can imagine, but people were just shoulder to shoulder last night celebrating this Philadelphia Eagles Super Bowl win. Take a look behind me. You can see there's a lot left to be done here on Market Street in Center City. There's a lot of trash left behind. There was actually a fire here. This looks like hotel linens from what I can see close up here that is out right now. Someone managed to knock down a light pole somehow, and someone was parading that through the streets. So there's definitely some work to be done, if you could say that, here in Philadelphia. But as you can see, it has majorly cleared out. Police asked people to leave this area around 1 o'clock this morning. So we do have a quieter scene than we did last night. Still some fans driving throughout the area. They just opened up the roads in the last couple of hours as we were driving through this area. So a lot of work to be done, a lot of information to gather still from the mayor's office, but as of right now, things are calm here in Philadelphia. People just really excited for the Philadelphia Eagles. It's been a few years since we had a Super Bowl championship here in the city, and we have learned that the parade that will go through Broad Street here in Center City will be on Friday. So a lot of cleanup left to do and a lot of prep before that parade happens, but an exciting time to be a Philadelphia Eagles fan for sure. For now, I'm reporting live in Center City, Philadelphia. Brenna Weik, NBC 10 News.
Brenna, thank you for bringing us the latest. It looks like it was quite a celebration. I'm pretty impressed you're standing there. I don't know if you've been up all night or you just woke up, but either way, quite a feat. Brenna Weik from NBC's WCAU in Philadelphia. Thanks for joining us. Now in D.C., we're keeping a close watch on Donald Trump, as usual, who's vowed to slash billions of dollars in U.S. defense spending, with the Pentagon set to become the latest target of Elon Musk's Department of Government Efficiency. Speaking to Fox News ahead of last night's Super Bowl, Trump hailed Musk's efforts in reducing government spending.
Trust Elon? Oh, he's not gaining anything. In fact, I wonder how he can devote the time to it. He's so into it. But I told him do that. Then I'm going to tell him very soon, like maybe in 24 hours, to go check the Department of Education. He's going to find the same thing. Then I'm going to go to the military. Let's check the military. We're going to find billions, hundreds of billions of dollars of fraud and abuse. But I campaigned on this.
Alice Barr joins us now from Washington. Alice, tell us more about the Trump administration's next target. Elon Musk's efforts have got a ton of attention and not good attention from many in the U.S. in terms of what he's been doing to some of Washington's key institutions.
Right, and the latest to come into the crosshairs has been the Consumer Financial Protection Bureau. Employees of that agency that help consumers, of course, with any issues that they might want to report, they were told to work from home until the end of the week. And this is now coming as the just confirmed director of the Office of Management and Budget, Russell Vought, took control of that agency and shut down all of its activities. So that's happening overnight, while, as you noted, the next that is set for targeting and potentially slashing is the Department of Education. Over the weekend, some Democratic lawmakers tried to get in to that department and were turned away. They have concerns about what cuts may be coming. President Trump on the campaign trail talked a lot about shutting down the federal education department and sending those responsibilities back to the states. He's also talking about going to the Defense Department and looking through the military for any areas of fraud or wasteful spending, as he's put it. And that could be, these are much bigger departments that we're talking about now, defense and education, as opposed to smaller cuts that have come, as I mentioned, at the Consumer Financial Protection Bureau and, of course, at USAID, the foreign aid. If you're really talking about larger cuts at these larger agencies, you could start seeing some bigger numbers and, yes, more pushback for sure.
And Alice, in terms of the pushback, tell us a little bit more about the response from Congress, in particular from the Democrats, to what Musk's been doing.
Yeah, we just heard over the weekend from Senator Andy Kim of New Jersey, who said that he thinks we're on the cusp of a constitutional crisis. We heard President Trump speaking about how he doesn't think that the courts should be doing what they have been doing in terms of stopping Elon Musk's Department of Government Efficiency from having some of the access and taking some of the actions that they've been taking. And he and J.D. Vance, the vice president, both said that they both sort of pushed back on the power that the courts have to be stepping in. And what you're hearing from Senator Kim and others is that poses another concern about the separation of powers if the executive branch is in some ways casting doubt on what the legislative branch is doing. You know, what we're hearing from Democrats is that they're not going to go along with anything to do with the Trump administration, and that's setting up a potential showdown over a government funding deadline next month. And it looks like we might be headed toward a shutdown when that moment comes, March 14th.
Alice, thank you for breaking it down for us, and thanks for your continued coverage. That's Alice Barr in Washington. Now back to the market action. We are coming off of 7 positive weeks in a row for European equities, and overall we are trading higher in Europe this morning. A little bit of divergence right now from the French market, which is down just below the flat line, but overall essentially flat on the morning. The Xetra DAX also hovering around the flat line. FTSE 100 up 0.3%, and the FTSE MIB up about 8 basis points or so. BP coming sharply into focus this morning after Elliott, the activist hedge fund, has reportedly built a stake in the company. According to multiple reports, the activist is trying to push BP to make some pretty transformative changes. It has underperformed peers. You can see in the past year, the stock is down 3.8%. That is an underperformance relative to peers. It's lagging behind Exxon, behind Shell. The size of the stake is unknown. We have no comment at this stage from BP or Elliott, but we are going to hear from BP tomorrow on the earnings front. So we'll see if they are given any questions from analysts on this. Usually the companies are pretty tight-lipped around activists, so don't expect much, but it will no doubt be front of mind for analysts and in turn for investors. We're also keeping a close eye on European steel makers and the broader metal space on the back of news that the Trump administration is putting forward new tariffs on all steel and aluminum imports. You've got ThyssenKrupp fairly steady this morning. Salzgitter also fairly steady, Norsk Hydro, ArcelorMittal. So investors seem to be taking the new tariffs in stride here. Investors no doubt trying to understand whether the tariffs in general are going to be a means to an end for the Trump administration 2.0 or an end into themselves. If we look at what's happened with Mexico and Canada, it looks as though they are a bit of a means to an end, but with China, we haven't seen either side come to the negotiating table, and we have seen the tariffs imposed. So still a lot of debate as to how these tariffs are going to be used more broadly. And of course, the big question is how Europe will come into the mix and how the U.S. will target Europe, which the Trump administration has flagged is coming. The U.S. steel companies in focus as well. You've got U.S. Steel Corp trading higher this morning. Steel Dynamics also trading higher, more than 7% apiece. Now, looking more broadly at U.S. futures, we are at this moment looking at a positive start to trade, more than 100 points higher indicated for the Dow and the NASDAQ. This comes after a pullback at the end of last week for Wall Street. Stocks ultimately closed the week lower. The NASDAQ lost about 0.5% over the course of the week, the Dow as well, and the S&P pulled back about 0.25%. So again, fairly muted in terms of the magnitude of the move lower, given all of the movement on the tariffs and all of the threats that remain in place on the tariff front. This week, we've got Powell's semi-annual monetary policy testimony to look forward to, more earnings as well, and more data on the macro front. So plenty to play for markets. That is it for Street Signs. I'm Juliana Tattlebaum. Thanks for watching, and Worldwide Exchange is coming your way next.
In a world of uncertainty and disruption, how will your investments stay resilient? We've been navigating change for 125 years, always looking forward, anticipating risks, and trusted to manage over $1 trillion in assets worldwide. Solving for the needs of investors today and tomorrow. That's the power of Nuveen.
The Power Plays are here, breaking down the markets with updates and deep dives. What's moving now and what's next for your money. Sarah Eisen, Carl Quintanilla, Money Movers, weekdays, CNBC.
Kelly Evans, The Exchange, CNBC.
Geopolitical stability, I think, is good for growth. It's good for peace.
Our principles are very clear. No agreement on Ukraine without Ukraine. It is impossible to keep NATO safe, the whole NATO territory safe. Yes, for now, yes, we can do that, but not in 4 or 5 years.
A risk is to the downside when it comes to growth, and we'll have to be very attentive to the data.
The structural weaknesses of our economy absolutely have to be addressed.
I wouldn't have been as successful as I was without my team. And I take that throughout my whole career, and I take it into my business life as well, and also with my family. It's all about my team for me.
You don't
do what Taylor Swift does without understanding how to build a business. It's not just about these songs that you hear on the radio.
She is just at the peak of all her powers right now.
How has she been able to change the game with her fan base, with her music?
Our female audience has grown leaps and bounds.
It empowers women to feel like they can sort of buy and do anything.
Nobody else does that.
That's a Taylor Swift effect.
The Swift Effect premieres Monday, February 17th on CNBC.
President Trump ups the ante in his global trade war. He says he'll introduce new 25% tariffs on all steel and aluminum imports into the U.S. as soon as today, and just maybe global reciprocal tariffs later this week. China's retaliatory tariffs on key U.S. exports take effect as Beijing reportedly weighs targeting more major U.S. technology companies. And lawmakers and investors remain laser focused on Elon Musk, his Department of Government Efficiency, and the mounting legal challenges in the way of his mission. This is Monday, February 10th, 2025, and you're watching Worldwide Exchange on CNBC. Good morning, and thank you for being with us on this Monday post-Super Bowl. I'm Contessa Brewer, in for Frank Holland, who, of course, loves the Eagles. Before we get to this morning's breaking trade war news, a quick check on the U.S. stock futures. Major averages coming off a negative week, but right now you're seeing them across the board. S&P 500 indicated to open higher by 25 points, the Dow Jones by 145 or so, and the NASDAQ by 138. Let's get a check on the bond market now with President Trump hinting he could start taking a closer look at this particular area. He was speaking on Air Force One yesterday, and you can see that the yield on the 2-year is 4.285, going higher, and the 10-year, 4.489%. Also a big week for data with CPI out Wednesday and 2 days of Powell testimony on Capitol Hill. And two great measures of volatility in gold. Right now, we're seeing trading at an all-time high. Gold has hit $2,929. That's up about 1.5%. We're also watching Bitcoin, which remains just below that $100,000 threshold at $97,633, but it's up 1.3%. And, of course, our big story this morning, President Trump raising the stakes in his global trade war, possibly forcing U.S. consumers to foot the bill. NBC's Alice Barr has the latest now from Washington.
Contessa, in one example of the courts intervening in the Trump agenda, there's a federal hearing today about the paused mass buyouts offered to federal workers. Labor unions are requesting to fully block the program.
President Trump returning to Washington overnight after becoming the first sitting president to attend a Super Bowl, making news before he stepped in the stadium with a new tariff announcement on imported steel and aluminum.
Any steel coming into the United States is going to have a 25% tariff.
And promising more tariffs are coming on countries that tax American exports. The growing list poised to potentially drive up costs for American consumers. While in a taped Super Bowl pre-show interview, the president defended Elon Musk's cost-cutting moves to slash federal agencies.
Bottom line, you say you trust him. Trust Elon? Oh, he's not gaining anything. In fact, I wonder how he can devote the time to it. He's so into it.
Indicating the Departments of Education and Defense are next in the crosshairs and pushing back against judges who have temporarily blocked some of Musk's Department of Government Efficiency actions and access.
I disagree with it 100%. I think it's crazy, and we have to solve the efficiency problem.
As Vice President J.D. Vance wrote, judges aren't allowed to control the executive's legitimate power, all adding to Democrats' alarm about the separation of powers.
We are at a point where we are basically on the cusp of a
constitutional crisis, seeing this administration taking steps that are so clearly illegal.
With Democrats unwilling to co-sign the Trump administration's moves, a bipartisan government funding bill is in peril, building toward a potential government shutdown next month.
And in another announcement, President Trump said he's instructed the Treasury Secretary to stop producing pennies because they cost more to mint than they're worth, saying he'll rip waste out of the federal government a penny at a time. Contessa?
It's not the first time that we've heard that proposal about the pennies, and seems fairly trivial given everything else that has happened, because we've seen from other countries around the world that they've gotten rid of their small change and it hasn't really had an effect. The 25% tariffs on steel and aluminum, though, immediately what I think of here is the rebuilding efforts, not only in Los Angeles following the wildfires, but following Hurricanes Helene and Milton. There is a massive amount of housing stock that needs to be repaired or replaced right now. When you're on Capitol Hill, is that top of mind for lawmakers when they're wondering how to go about either pushing back against Trump or supporting his trade war plans?
It's a really good point, Contessa, and we've heard President Trump express a little bit of reticence about going in strongly to Los Angeles and the rebuilding effort there. He's talked about potentially pairing that with some other things that he wants to see out of California, out of the legislature there. But as far as Hurricane Helene and North Carolina and Georgia, the areas that are hard hit there, he's been very forward about saying he wants to get assistance there a lot faster. So this, I think, falls into the category of lawmakers on Capitol Hill trying to pick their battles and figure out when they want to go in hard against something the president is doing and when they want to maybe save their political capital. Overall, there has been concern from both parties about the effects that tariffs could have on American consumers. And we're expecting more details today, and we'll see what the response is.
And something I'll be following, because, of course, if rebuilding costs go up, that will affect the insurers whose businesses I follow so closely. Alice, great to see you this Monday morning. Thank you. Global investors on edge following Trump's latest trade war escalation. Juliana Tattlebaum in London now with European reaction. JP Ong standing by in Singapore with the Asia trade. Juliana, let's kick it off with you.
Contessa, good morning. Well, European markets as a whole have been fairly resilient to the news of these new tariffs from the Trump administration. The European equity market overall trading higher this morning. We are coming off of quite a strong run. Bear that in mind. 7 positive weeks in a row for the main benchmark, the Stock 600. So you can see here all of the major bourses in Europe are modestly higher this morning. We are watching the steel makers closely, though. The European Commission has said this morning that the tariffs would be, quote, unlawful and economically counterproductive, adding it will aim to protect the interests of European businesses. So continuing to say that they will respond to the Trump administration. We don't know what that response will look like at this stage. You've got ThyssenKrupp, the steelmaker, trading around the flat line this morning. ArcelorMittal down 2.6%. Norsk Hydro down about 0.6%. And Salzgitter down 0.8%. So we are seeing some selling, outsized selling in these steelmakers and the broader basic resources space in Europe. Overall, though, fairly resilient given the threat that looms on the horizon. Contessa?
All right, Juliana, thank you very much for that. Have a great day. To Asia now and JP Ong. JP, what are you seeing?
Well, Contessa, whenever you hear news about tariffs and trade tensions, it doesn't paint a pretty picture for Asian markets, which started off this new trading week on the back foot. You can see most major indices closing in the red, and the Nikkei 225 barely closing flat to slightly in the upside. And as we mentioned, the steel makers in Asia are also in focus because of that plan to impose those 25% tariffs on steel and aluminum imports to the United States. The likes of Nippon Steel, who did also refuse to comment on news that President Trump is not a fan of their plan to acquire U.S. Steel. Well, their shares were also a bit under pressure in today's session. Korean steelmakers such as POSCO Holdings and Hyundai Steel also under pressure in today's session, also losing ground. But not everyone was suffered, actually. Keep in mind that BlueScope Steel, which is a steel maker in Australia, they actually operate a steel mill just about 30 minutes outside of Toledo, Ohio, and they are seen as having these U.S. operations that might help them escape the wrath of possible trade tariffs on these steel imports, but could actually pose an uptick in demand from that steel mill if that does happen. One set of markets that did actually benefit in today's session were greater Chinese stocks, and that's because there is hope that there might be more stimulus coming down the pipeline, but also take a look at some of these semiconductor stocks listed in Hong Kong, such as Hua Hong Semiconductor and SMIC. Both of these stocks are actually up more than 20% since the end of January with the news of DeepSeek and their AI model that rattled markets and really questioned American exceptionalism in the tech space, actually boosted AI stocks and the tech sector in Hong Kong, and thus also one of those sectors to watch that might actually give a bit of a booster for Chinese stocks and Chinese markets in general in the first quarter of this year. Contessa, it's back to you, and good morning.
You might think that the tariff news on steel and aluminum would affect like Nippon Steel even further. When you're listening to Asian media, is it largely seen that this is a negotiating tactic rather than a firm and fast rule for the way things are going to be in 2025?
Well, Contessa, I think the hope is that this is indeed the salvo or the initiation of a possible negotiation between President Trump and the Trump administration and those hopes. But again, there's still a lot of uncertainty as to whether or not this might scupper this plan by Nippon Steel to acquire U.S. Steel. One thing that might actually be seen as a bit of an upside too is that if it is taken off the table, and if it does result in an equity investment by Nippon Steel rather than an outright takeover, it might mean that that a lot of this capital that might be devoted to acquiring U.S. Steel might not be wasted, at least on this particular acquisition, and thus might actually be seen as a bit of an upside for Nippon Steel. But again, there's too much actually uncertainty to read to try and at least read through with regards to this. And again, there is only hopes that this might actually just be the start of a negotiation rather than an outright refusal of Nippon Steel's possible acquisition or planned acquisition of U.S. Steel. Contessa.
JP, thank you very much for the update there from Singapore. The tariff news could be front and center on the agenda this week, including January CPI and 2 days of Fed Chair Jay Powell testifying on Capitol Hill. Joining me now, Janet Mui, who's the head of market analysis at RBC Bruin Dolphin. Janet, good to talk to you right now. First of all, on Air Force One, the president said that he's looking into treasuries right now. He said, there could be a problem. You've been reading about that with treasuries, an interesting problem. It could be a lot of those things don't count. It's not really clear whether he's talking about our debt or payments that are processed through the Treasury Department right now. But heading into the Fed chairman's testimony on Capitol Hill, how likely is that to occupy top-of-mind concerns for investors?
Hi, good morning, Contessa. Thanks for having me. I think in general, investors will remain concerned on the debt sustainability situation and the huge debt deficit situation in the U.S. So I guess, the term premium could still face upside pressure as a result. And generally, we believe that U.S. Treasury yields are likely to be trading in a range in the near term. Because I think investors, on one hand, it proves that in recent weeks when the market sentiment weakened, actually investors go back to bonds. So there's a hedging purpose there for bonds. But at the same time, there's inflation risk and there's this debt concern risk that will push up the term premium. So I guess, it is very hard to say, but I presume we're going to be in a trading range for now. And if we hit about 5% again, that could put downside pressure on equities.
And we're seeing the hedging risk showing up in gold as well, hitting new highs. What about in Europe? Do you see that there's more opportunity for rate cuts in Europe than what might be factored in the United States?
Yeah, I think absolutely. Well, I'm sitting in the UK and we just got a rate cut last week, and I believe that UK data is likely to see further weakness, and the bank would have to focus more on supporting growth versus worrying about inflation. I think the base case is gradual rate cuts, about one cut per quarter, but there is certainly potential for faster rate cut if the data gets worse. And I think for European Central Bank, the consensus is a couple more rate cuts, whereas our view is that the U.S. potentially could be 1 to 2 rate cuts by the end of the year, but entirely feasible. We don't see any rate cuts in the U.S. at all. So you get this, extending monetary policy divergence, which for us, we would favor, for example, UK gilts versus U.S. Treasuries.
And equities?
Well, equities, I think generally global equities should perform better than bonds. And in particular, we still prefer U.S. equities. I think the case for equities versus bonds is because general economic growth is still positive in the U.S., and I think that's very important. That implies corporate profits should continue to grind higher. U.S. equities, I think, in a trade war scenario, I think U.S. equities is still likely to perform better given it is more domestic focused, and also, the country that has a higher trade deficit is likely to lose less, relatively speaking. And I think U.S. equities are still likely to be regarded as defensive. So, corporate profit outlook is still looking better in U.S. versus Europe and the other regions, for instance. So I would say we would still prefer U.S. equities. But again, given, the risk we have with trade and valuations and the sentiment at the moment, I think we are not going to get more bullish from here.
Well, today, it looks like at least heading into the open, we're heading higher. Janet, thank you. Appreciate your time on this Monday. A lot more to come on Worldwide Exchange, including much more on President Trump's new trade war threats and the growing list of legal headaches for Elon Musk's Department of Government Efficiency. Former Chief of Staff to Vice President Mike Pence, Mark Short, joins me to weigh in. Plus, Beijing raises the stakes in its tit-for-tat with the White House. One sector could get hit hardest. First, global policymakers, CEOs, and scientists descending on Paris this week for a major two-day summit focused on AI. And our Arjun Karpal got an invite as well. Hi, Arjun.
Hi, Contessa. Look, world leaders and CEOs are descending on Paris for the AI Action Summit. What are they talking about here on the ground? I'll tell you right after this break.
$1,500 movie? I don't want this flight to end. This is the game changer seat. Look, it even comes with binoculars.
Want to make some extra money, but not sure where to start? CNBC Make It will teach you the skills to earn passive income online. Take our new online course that will help jumpstart your business idea. Get expert advice and hear real-life success stories.
Soon, you'll have the tools that you need to start your own passive income business.
Learn how to start generating additional income right now. Register at cnbcmakeit.com/passive income today. Frank Holland, Worldwide Exchange, CNBC. Crucial market coverage, actionable insights, can't miss reporting that'll impact the tape and your money now. Be here when the opening bell rings. Squawk on the street. CNBC.
7 minutes before 6 a.m. in New York City, and a check on a few corporate stories that we're tracking this morning. Meta Platforms reportedly is planning to carry out company-wide layoffs as soon as today, with those affected receiving notice as early as 5 a.m. local time in most countries. It comes as shares of Meta look to extend their record-breaking 15-session win streak. It's the longest ever for any Magnificent Seven name, according to the Dow Jones. Shares up almost 1%. Elliott Investment Management has reportedly built a significant stake in UK oil giant BP, looking to boost shareholder value through transformation. The report adds that Elliott believes BP is significantly undervalued. Those shares are up 6.3%. And the head of Google's DeepMind speaks in Paris over the weekend, saying DeepSeek's AI model is probably the best work coming out of China, adding that its AI models show DeepSeek has the potential to change things on a geopolitical scale. Taiwan Semiconductor says its first quarter sales likely will come in at the low end of its forecast range. They say that there have been several production disrupting earthquakes last month. TSMC, though, is maintaining its full year outlook. Taiwan Semi up a little more than 0.5% now. The U.S. market's coming off a negative week with all three major averages in the red, and the Dow breaking a 3-week winning streak. Tariffs, inflation, the Fed earnings, they could all be driving factors for investors this week, although futures all in the green right now. Let's bring in Drew Pettit, U.S. equity strategist at Citi. It looks like we're shaping up for an open. Is this just opportunistic buying?
Honestly, I think we're just getting through just a revolving door of risk. And look, while the tariff announcements really to us aren't good fundamentally, we haven't really got to the point where we're talking about broad tariffs, and we're still not talking about broad tariffs as it comes to Congress working it into a reconciliation bill. So yeah, look, it's a modestly positive open, but we still have a lot of risks, and we keep working through kind of a news story almost every day is what it feels like.
Okay, so it looks like Mag 7 is slightly underperforming, but you're pointing out that equal weighted growth stocks in the NASDAQ are leading value.
Yeah, I think this is really, really interesting because everyone who's been preaching value, value, value feels like they're taking a victory lap to start the year, because when you look at the cap-weighted style indexes, value is really outperforming growth. But on an equal weighted basis, you actually have growth stocks beating value. You have the equal weighted NASDAQ beating the S&P 500 equal weight, and even small cap. So it's funny, like, for as much as we want to talk about it's the end of growth, really it's just the broadening of the growth trade, and a lot of those stories are still working.
Your word of the day is also your trade of the day.
Well, I would say, yeah, growth is the word of the day, because there's a couple things. One, growth is still working for investors. Yeah, I just highlighted some key points, but on top of that, it's the value companies where growth is inflecting that's driving the story. So as much as we want to talk about valuation, we want to talk about risks, a really great cure-all to that is to have really good growth and to have really good fundamentals.
Okay, and Uber, which you're picking Uber as your trade, which you're kind of preaching to the choir here because there's no sell ratings on Uber.
Yeah, it's funny. I'm not worried about consensus here. I'm thinking about market pricing. And when we think about a lot of the growth stocks, there's actually not much of a margin of fundamental safety. But Uber, while it's up a lot in the last couple of days, is coming off a pretty bad session after it reported actually good results. It's a stock that really hasn't moved over the past year. And even though the top line growth is decelerating, you see a ton of operating leverage in the platform as EBITDA expands, and EBITDA margins are set to expand not just this year, but into next year as well. So again, growth story with some fundamental margin of safety and expanding margins ahead. We think Uber is a really good trade for the growth side of your portfolio.
Well, and there you can see the shares moving in the early morning trade up more than 2%, so setting up for some really positive movement throughout the day. Drew Pettit, it's good of you to join us on this Monday morning. Thank you.
Yeah, thanks, Contessa.
Here's what to watch in the week ahead. Several pieces of economic data will be coming in, including CPI and PPI. Meanwhile, Fed Chair Jay Powell heads to Capitol Hill. He'll be testifying before Senate and House committees. And the earnings season rolls on. We've got results coming in. McDonald's, SoftBank, Coca-Cola, DoorDash, Robinhood, and Airbnb not featured. You see Wynn Resorts on there. I'll be paying close attention to that. And DraftKings also reports at the end of the week. So Squawk Box. Oh, wait, before we get there, let's check on futures. They're green. Up across the board. Here we go. And Squawk Box starts right now.
Good morning. President Trump expected to announce more tariffs, this time aimed at steel imports, while China taking its own action, while Elon Musk is lashing out. A judge blocked access by his Doge team to the Treasury payment system. And fly, Eagles fly, that's what you hear from the fan.
Eagles fly.
February 10th, 2025, and Squawk Box begins right now.
Good morning, everybody. Welcome to Squawk Box right here on CNBC. We are live from the NASDAQ market site in Times Square. I'm Becky Quick along with Joe Kernan and Andrew Ross Sorkin. We're back at home downstairs.
We are. Back in the studio.
Back in beautiful Times Square.
Times Square.
Or Times Square.
Nothing much happening.
Snowy
so far.
Snowy Times Square. A little bit.
No Elmo sightings yet. Although I saw him on a commercial.
I did too. That was a great commercial, actually. It was the On. He was talking to Roger Federer.
Roger Federer.
Which was very clever because On doesn't look like On. It looks like he's right.
I think he said like CQ or
QC. Yeah, it does. He's right. This morning, the things are looking up for the markets. You're going to see some green arrows across the board for the U.S. equity futures. Right now, it looks like the Dow's indicated up by just over 150 points. You've got the S&P futures up by just over 25. The NASDAQ indicated up by just over 140. This does come after a down day on Friday with significant enough declines that it pushed us into negative territory for all three of the major averages. It was the first week in a row down for the Dow, the second for both the S&P and the NASDAQ, and we'll continue to see where things head this morning. There's not huge moves to the downside. You're still talking about the NASDAQ down by a little over 3% from its all-time highs. The Dow and the S&P 500 only down by 1% or so from all-time highs. But if you're watching the transports, there's a little more activity that's happening there. I think at this point they may even be down by 11.5% from their all-time highs. So keep an eye on that. Keep an eye on the small caps, which are down by about 7.5% from their all-time highs. Treasury market's something to watch too. And there was a lot of commentary. President Trump, the first sitting president to go to a Super Bowl, he made a lot of comments on the way there, and we're going to talk about some of those things. But one of the things he said was there were some really interesting things that the Doge team found at Treasury. No one's entirely sure what he was talking about just yet, but the implication could be that there's not as much debt as possible. It's another reason to watch Treasury markets today. Right now, the 10-year is sitting just below 4.5% at 4.49. The 2-year is at 4.28.
Meantime, President Trump expected to announce a new 25% tariffs on all steel and aluminum imports into the U.S. The president gave a preview of what's to come yesterday on board Air Force One on his way to the Super Bowl.
We'll also be announcing steel tariffs on Monday.
Tomorrow?
Monday, yeah, tomorrow.
What countries will those go on?
Everybody. Steel.
Including Canada, Mexico,
Yeah.
United States?
Any steel coming into the United States is going to have a 25% tariff.
What about aluminum?
Aluminum, too.
Shares of American steel and aluminum producers are rising this morning on the back of that news. You can look right there, up close to 10% in some cases. In Cleveland Cliffs, close to 10%. United States Steel Corp, a little over 8%. Largest sources of steel imports are Canada, Brazil, and Mexico. Now, President Trump also planned to announce reciprocal tariffs on Tuesday or Wednesday. These will apply to all U.S. trading partners. And while we're on the topic, if we will, of metals, Nippon Steel not commenting on President Trump's statement on Friday that the Japanese steel maker's bid, I should say, for U.S. Steel would be in the form of an investment instead of a purchase. The Japanese officials saying that Nippon Steel is proposing a bold change in plans when it comes to U.S. Steel. So we're going to have to watch and see what happens there.
Yeah. As expected, China imposed retaliatory tariffs on the U.S. The tariffs will hit about $14 billion worth of goods. Beijing taking that action after the U.S. added a 10% tariff on China's products. And China, in this case, is targeting liquefied gas, coal, crude oil, and farm equipment, along with some automotive products. Oil prices, though, moving higher this morning. Taking a look at Caterpillar and Deere right now, pre-market. You can see that those stocks, either they're not trading or they're unch. We're going to have a live report from Beijing later this hour.
And the Consumer Financial Protection Bureau has been ordered to halt all supervision. OMB Director and now acting CFPB Director Russell Vogt telling employees to work remotely at the headquarters in Washington, which has been closed. On Saturday, Vogt issued a notice that demanded employees cease all supervision and examination activity. Vogt also notified the Federal Reserve that the CFPB will not be taking its next draw of unappropriated funding. Last week, Treasury Secretary Scott Bessent called on the agency to not start any new investigations or approve or issue final rules.
Now on to Doge. Elon Musk called for the federal judge that temporarily blocked his team from the Treasury Department's payment system to be impeached. The court precluded officials without proper background checks and security clearances from accessing the payment system through at least next Friday, including political appointees and special government appointees affiliated with Musk's Doge team. 19 Democratic state attorney generals sued President Trump. They say that he violated constitutional law by giving Musk access to the Treasury Department. Vice President J.D. Vance suggested the judge acted illegally and is not allowed to control the executive's legitimate power. So that is a legal case that's going to continue.
All of this is going to play out in the courts.
All of this is going to play out in the courts. And as we've said, if it's a read-only situation, you'd hope that that would actually be good, because we got to get to the bottom of all of these costs. Yeah. The bad news is if you think that they're being taken and potentially becomes a national security threat in some way, or gets put into some kind of AI system that then gets you, well, that's where
there are questions about security with it, and then there are questions about whether the executive branch has the authority to shut down offices or appropriations that have come from Congress. And this has been a long-running battle.
But to me,
how does this play? Doesn't this only go till Friday? What the judge said, and
yes, and there are other lawsuits that have been brought, and eventually it's going to be taken up by the Supreme Court. Would be my guess. Yeah.
Right. But what happens Friday?
There's some other lawsuit, I think, that is pending or that is expected to come up. So, but yes, you will anticipate that all of this will be decided by the Supreme Court.
Let's get to some other headlines from President Trump in an interview ahead of the Super Bowl. Eamon Javers joins us now with more. Hey, Eamon.
Hey, good morning, Joe. You're right. President Trump was very busy yesterday, including this interview with Fox News' Bret Baier that aired in the pre-Super Bowl hype on Fox yesterday. Bret Baier asked the president if he trusts Elon Musk. Here's what he said.
Trust Elon? Oh, he's not gaining anything. In fact, I wonder how he can devote the time to it. He's so into it. But I told him do that. Then I'm going to tell him very soon, like maybe in 24 hours, to go check the Department of Education. He's going to find the same thing. Then I'm going to go to the military. Let's check the military. We're going to find billions, hundreds of billions of dollars of fraud and abuse. But I campaigned on this, Brett.
And separately from that interview, as you guys have been talking about, President Trump talked to reporters on Air Force One and said he is going to put those tariffs on steel and aluminum, 25% on inbound steel and aluminum from anywhere in the world. He also said he's going to announce reciprocal tariffs this week on countries that tax U.S. imports. Those, he said, would go into effect almost immediately. And then, Becky, you were mentioning this moment, and I think we want to play this soundbite for you because the president raised an issue with treasuries, and we're not exactly clear on what he's talking about. But take a listen to this, because this could have some real impact for the Treasury Department and maybe the Treasury market later on today. Here's what he said.
We're even looking at treasuries. There could be a problem. You've been reading about that with treasuries. And that could be an interesting problem, because it could be that a lot of those things don't count. In other words, that some of that stuff that we're finding is very fraudulent. Therefore, maybe we have less debt than we thought of. Think of that.
So very fraudulent, the president says. Something in the Treasury market or the way Treasuries were issued, he's suggesting some of the Doge team has found some kind of issue with fraud in the Treasury market, and that might suggest that the U.S. has less debt than we thought of. Not clear what the president's talking about there or what that could look like, but it just raises the question of whether the president's going to try to cancel some U.S. debt, arguing that the initial Treasuries that were issued were in some way fraudulent or there was fraud in the Treasury market. That's going to raise a lot of questions for Scott Bessent and the team over at the Treasury Department today. A lot of people in that vast liquid Treasury market are going to have some question marks over their heads listening to that and trying to figure out what the president meant throughout the day today, guys. Back over to you.
Eamon, I have a complete curveball question for you. It's Super Bowl related, but it's money related and it's Trump related. So I thought it was very exciting to see the president at the Super Bowl. And my kids thought it was exciting.
I thought it was very exciting to see the Eagles win the Super Bowl, by the way.
And then, but then, one of my sons said to me, why has the president never gone before? And so we start to look this up. And apparently, many years ago, there was a question about the cost of going to the Super Bowl because of the amount of security that's required. And we were trying to do the math. Can you help us do the math of what do you think it costs, given that we're talking about Doge and everything else? And look, we can make a subjective call about whether it's worth it or not. I actually think it's a pretty good thing for the country. But what do you think the cost of it is?
Yeah, that's a great question. It's probably, millions, plural, of dollars for the president to go there. Just operating Air Force One is expensive, right? So then when you deal with the security, the additional
apparently 200 grand an hour just to keep the plane in the air.
Right, exactly. So you're talking millions of dollars for that. And the president left, by the way, right around halftime. He didn't stay for the whole game. He had to beat the post-Super Bowl traffic just like everybody else, I guess. But it's an expensive thing. It's always expensive to move the president, and the country sort of just buys into this deal where we agree that we're going to move presidents around wherever they want to go, and they're going to use their discretion to do that in the national interest. And you can argue, about presidential vacations over the years have become controversial, presidential trips that are political versus doing the business of the country. That's been a debate over the years. In the end, though, Andrew, the deal is the president gets to go where he wants to go, and he sort of waves the flag and uses his personal presence as a leader of the country at his own discretion, and that's kind of it. People can chip away at that and make arguments, but we've never had anyone be able to, in Congress or anywhere else, be able to curtail presidential travel by arguing that it's too expensive.
All right. Thanks, Eamon. We're going to talk to actually NEC Director Kevin Hassett. Is going to join us at 8:10 a.m. Eastern Time.
And if you didn't watch the end of last night's game, Eamon spoiled it for you. The Philadelphia Eagles.
I don't think Tom Brady standing back there could have done any better than. Although Mahomes,
I don't think it was Mahomes' fault.
Mahomes, well, he definitely had some happy. He had some happy feet there.
But there was so much pressure from the Eagles.
Got hit. He was either. I mean, it was.
He was scrambling. He was getting the ball.
A couple of times I was watching Kelsey too, who we think of him as a receiver. The guy just walked right by Kelsey a couple of times and just zeroed in on Mahomes. It was painful to watch. It was a crappy game.
It was painful to watch unless you're an Eagles fan.
Eagles fans loved it. But as a game to watch,
wasn't a great game.
With all the hype to watch, and we always hype it for 2 weeks. We go nuts. It was crazy to see Mahomes dominated like that, though. It was his line that was dominated.
Yeah,
It really would. But and even the passes that were like so uncharacteristic of behind guys
and then one time it got knocked out of his hand from behind him in the second half. Jalen Hurts anyway was the MVP of the game.
42, but Saquon, the Chiefs focused on Saquon. It was great.
And as a result, everybody with the viewers last night, there were some
you liked
good ones.
them. I didn't.
I like the Elmo ad.
I have to keep pinching. I have to keep reminding I don't watch ads, so I'll be there and oh shit, I'm supposed to be watching these ads. I'm supposed to be watching them.
The long version of Duncan.
That was good.
Which you didn't get to see on the show.
I saw it.
That wasn't the long version?
There's a 6.5-minute version. For those of you doing, what do they call it, 2 screens now?
Screen and screen.
Screen to screen. Yeah. You can watch it on YouTube right now. It's awesome. It's like a movie. It's like a mini movie. It's pretty great. I got a lot of flack for saying that I liked the Pfizer commercial.
Oh, I actually did like that too.
Which
The
I thought was
cancer,
great,
the Pfizer
but-
cancer
Well,
commercial.
now they're a cancer company. I like that
Because people seem
they're
to be-
not what you. They're not the leading cancer. They've never been.
No, but
a
the idea
cancer
that they're
company.
hoping to make.
They're
Oh
hoping
yeah.
to.
Oh yeah. Forget about what we did before.
I thought it was a great commercial. On the merits of the commercial.
It was duplicitous.
It was a tearjerker to see
it was
a child with
duplicitous.
cancer being able to come home.
Oh yeah.
It
Well,
was
that'll
a
work every
The
time.
Google
but-
one was pretty good.
Did you see Bill
Which one
Murray?
was good? I did see Bill.
Yeah.
I didn't understand what the hell was going on.
Well,
we went on to
apparently
the.
it's a real email
yeah,
address.
you can go.
Yeah.
Right.
We got to go.
We could talk about ChatGPT. Did you see that?
I did see that
I thought
ad,
that was
yeah.
interesting.
See that.
And then what about all of the? Did you see all the speculation online about this Musk ad that never happened?
Didn't see that.
That's what I was looking for.
No. The toilet paper ad was pretty good.
There was this whole sort of conspiratorial view that somehow Musk was going to buy millions of dollars of ads to literally line by line show you everything that he's discovered under Doge.
Oh, that would have been
And there were these
cool.
people online going
Why does
crazy
he need to
about
do it? He's got his own thing he can do it for free on.
on Twitter. That's what I thought. Yeah. Okay, coming up on the other side of this, they're going to kill us. We're over time. An oil giant now a target of an activist investor. We're going to tell you which one right after the break. Plus, we're going to dig into the markets ahead of some big reports this week. And then later, Take-Two CEO Strauss Zelnick is going to be our special guest. Got a lot to talk to him about. Squawk Box returning after this.
CNBC. Live ambitiously.
Energy is set to be one of the hottest topics this year as the artificial intelligence boom, global geopolitical strife and US President Trump's return to office all put oil and energy alternatives in focus. Join me at India Energy Week, live from New Delhi as we explore the future of energy only on CNBC.
Ambition to me is the American dream. It's why my mother came over from Taiwan. It's why people watch CNBC, because they want a better future. I was working as an analyst in Shanghai when my company landed in the news on accusations of espionage. I decided right there and then that I wanted to be on the other side reporting on the news. I love bringing transparency to complicated topics. I think it's so important for us to deliver the right numbers to our audience so they can make better investment decisions. San Francisco was built on ambition, a belief that anyone can disrupt any industry and change the world.
How much would you pay for luxury travel? A week's stay costs almost $270,000.
It's on the list for $30,000.
From secret getaways to one-of-a-kind deluxe experiences and bespoke services all the way.
The next evolution of the luxury traveler is experiences. Experiences really that money can't buy.
This is First Class, only on CNBC.
Liang Weiqi speaks 14 languages fluently, and he's an AI engineer and linguist involved in developing the Sea Lion model.
We're going to look at an example about informal Indonesian. We are essentially asking the model, our friend is panicking, and he's working very hard every day. How can we help him best manage his work?
Yeah, but in that context, they're using an idiom, right?
Exactly.
And they're saying that his beard is always on fire.
Exactly. For this demo, we have 4 panels. So on the left, we have Sea Lion, our model.
Okay.
And we have 3 other models on the right. We can see that it didn't understand the phrase.
It took it literally,
exactly.
basically.
Like it's thinking about setting someone on fire.
Oh no, it's also in the same tone.
Exactly.
It's casual, informal, it's still colloquial, whereas this one is still sticking to like a more formal kind of response.
Exactly. And that's really what we want to achieve as well.
Squawk Box. Meta now on a record-breaking streak, rising. If you're an owner of this stock, you got to be happy. It's been rising for 15 straight sessions. We're sitting at $721. Paul Meeks joins us, Harvest Portfolio Management CIO. Can you explain what's happening here, sir?
Sure. I think the catalyst was their quarter, and it was not the results that they necessarily reported or even guided to for the next period, but the aspiration that Mark Zuckerberg shared that they want to be not just the American, but the world's standard for AI open source models. And if we indeed go in that direction and they execute, the fact that they already have 3 or 4 billion people on their apps at least once a month puts them in the driver's seat, and it could be a really explosive opportunity. There's that. I would say that's the 80% of the 80-20 rule. The 20 is probably the monetization, which we'll see accelerate this year in Reels. And there's some interest in what happens with TikTok, of course, and I don't know what's going to happen there in the end. But if TikTok is restricted in the United States in some way, form, or fashion, obviously very positive for Meta.
Paul, so let's just talk, though, about multiples here, about sort of floors, ceilings. $721, is it priced to perfection?
No, I don't think so. The multiple is relatively high over its history. And this year is going to actually be a slower growth year, at least on the top line with their increased investment. But I think over time, stock is trading in the high 20s PE on next year's earnings, the S&P low 20s. For this opportunity with Lambda, the open source AI model, it could be explosive to the upside. So here's what I would do. I'll undoubtedly have fresh money cash, new clients coming in today. They're a blank sheet of paper. I'll buy it from my existing accounts that have had the stock for years. I just continue to roll with the tide.
Right. Paul, walk us through the economics of Llama. Llama, of course, being their version, if you will, of ChatGPT, except that it's open source and it's free, and therefore it's less clear about how the economics, if you will, work, at least standalone, right? They're using it internally on Facebook, on Instagram, I imagine somehow in WhatsApp at some point. But in terms of what it does long term, unless you think what it really does is just undermine the value proposition of all of its competitors.
Excellent question. First of all, we don't know, and it would be speculation on my point, but we do know that in the past, this is the MO for Facebook. What they do is they introduce a product, they tinker with the product, they seek to get to 1 billion subscribers, and when they do that, they monetize it. And I think that's in the cards. And so I like the opportunity. So to answer your question directly, we have to get the users, then we focus to the monetization bit, and I think they will.
Are there good examples of open source products like this where you think that there's an ability, and when you say you're speculating, where they would charge just for the model itself? Does this give them some kind of entree into the enterprise? I mean, what are we talking about here long term?
So I actually think it'll be not just a consumer product, but an enterprise product, and it could come in lots of different forms. It remains to be seen. As far as their competitor, we saw their competitor make an announcement the other day. The only one of note, although it's not very large but significant in the news, is China's DeepSeek. And the beauty of that model was, they were able to create a competition and spending just 2 months developing it and only $5.6 million. So I think that Meta's doing the right thing.
Right.
They are spending heavily. They not only confirmed their CapEx for next year, they upped it, but they're going to need that AI infrastructure, not necessarily to train models that'll be passed, but actually run this Goliath enterprise.
Okay. Hey, Paul, we got to run. I don't know if you saw the Chris Helmsworth, Chris Pratt Meta ad. with the glasses. I don't know how you think that's going to factor into earnings, but it's maybe factoring into fashion for now. We got to go. It's nice to see you, sir.
Best wishes.
All right, McDonald's just reporting earnings fell 5% over the prior year to $2.83 a share. That was in line with expectations. Revenue of $6.39 billion was slightly below estimates of $6.44 billion. For the fourth quarter, the global comps increased by 0.4%. That was better than expected. They were looking for a decline of 1% if you looked at the analyst consensus. International operated markets increased by 0.1%. That was much better than the 1.5% decrease that the street was expecting. U.S. comp store sales, though, were down by 1.4%. That was driven by a decline in the average check, not the traffic patterns. The street had been expecting a decrease of just 0.6%. That stock up by about 1% on the news.
Okay, it is just past 7 a.m. right now, 7:02 to be exact, right here on the East Coast. You're watching Squawk Box on CNBC. We'll call it the day after the Super Bowl. I'm Andrew Ross Sorkin, along with Joe Kernan and Becky Quick. How many people are calling out sick this morning is always the question. Today is the highest sick day rate of the year.
And so, for those of us who show up, there's not a whole lot of productivity.
That's a separate matter. Among today's top stories, President Trump returning to Washington overnight after becoming the first sitting president to attend the Super Bowl. He made news before he stepped in the stadium, has a new tariff announcement on imported steel and aluminum, and promising more tariffs are coming on countries that tax American exports. That is roiling and in some cases helping the aluminum makers here in the United States. We're going to show you what is going on there in just a moment. He came back right after halftime, or at least headed back after halftime, like a true professional that does this in terms of guys who go to the Super Bowl all the time. Half of the real Super Bowl pros go to the weekend and they leave before the game even starts.
If you knew the game was going to be last night's game.
He might have stayed in Washington. Yeah. Meantime, China's retaliatory tariffs on key U.S. exports taking effect as Beijing reportedly targeting more major U.S. Technology companies. And then we should tell you about this. Sony giving PlayStation Plus members 5 extra days of service following a network outage this weekend. The company said PlayStation Network had fully recovered as of yesterday from an operational issue. The outage started Friday evening. Players had issues with logging into their accounts, visiting the PlayStation Store, or launching online games. And I imagine the Sorkin boys are probably happy that they're going to get 5 extra days as a result of all of this.
And checking the futures, which
they play.
Tariffs? What tariffs? They're up this morning. Contessa Brewer is very productive. She's already, I know you did an hour of live TV already, and now you're going to look at this morning's pre-market movers. How are you feeling?
Andrew,
you all right?
Andrew says I'm a real professional because I go down for the whole Super Bowl lead-up and then back before the game. So that's the way we just work it. You know, we got to get to it.
It's the way you roll.
I didn't, and by the way, wearing Eagles green, I didn't even know because I went to bed before the end of the game. So who knew?
No, yeah. Yeah, you would have known after the first 2 sequences, I think,
true.
almost.
I did stay through halftime, so yeah, I did see where things were heading.
Pretty good idea.
The big story this morning, let's get right to it. Steel stocks, they're just climbing because President Trump told reporters that he will impose 25% tariffs on all imports of steel and aluminum into the U.S. The move would, of course, broaden his restrictions on some of the country's top trading partners, including Mexico and Canada, which are among the largest exporters of steel and aluminum to the United States. The president didn't say when duties would take effect, but he added formally he would announce those plans later today. But there you're seeing U.S. Steel up 5%. Look at Nucor, up 9%. You've got Cleveland Cliffs up almost 8%, and Alcoa up 5%. We'll have to watch the insurers and see what this does, though, to the cost of rebuilding post-wildfires and Hurricanes Helene and Milton. All right, so you've got shares popping in the pre-market of BP, more than 6.7% on news that activist investor Elliott Management has taken a stake in the energy company. CNBC reached out. We don't yet have details about the size of the stake or those future moves, but RBC analysts predict that Elliott could push the British giant to split its core gas and oil segments. And last month, BP had warned of higher corporate costs, lower refining margins, other one-off costs look at what shares have been doing here over the last year, down more than 5%, but up this morning more than 6%, as I said. And Meta laying off 5% of its workforce across multiple countries. That's according to an internal memo reported by Reuters. Those cuts will reportedly target low performers, even as the tech giant accelerates machine learning engineers and hiring of them. Shares of Meta have just been on a tear. They're closing in higher in each of the last 15 sessions, up more than 50% over the last year or so, and right now moving higher by just a little less than 1%, guys. Joe?
Very good. All right. Yeah, I saw that green on Worldwide Exchange.
You
I thought,
did.
that's nice.
Did you think I was an Eagles fan? You did, didn't you?
I didn't know if it was a coincidence. I almost wore green tie today.
I
Why are
almost wore
you an
green.
Eagles fan?
Because my parents live in South Jersey, and my parents, they're all Eagles fans.
Okay. My daughter suddenly is an Eagles, you know.
Well, she went to UPenn.
She went to Penn. She went to Penn.
It's okay.
Bengals are open for business, you know, a little loyalty. She's also a Ravens fan because she's in D.C. now.
Yeah.
And a Commanders fan. Must be nice, right? Yeah.
Well, you always got some skin in the game.
Exactly. Unless it's a Giants-Jets.
Yeah, right. All right, when we come back, Super Bowl 59 advertising winners and losers. We're going to take a look at the commercials that have America buzzing this morning. And later, Majority Whip Tom Emmer joins us to discuss the president's plan to announce new tariffs and much more. Squawk Box will be right back.
The Bond Report is brought to you by PIMCO. The Bond Report is brought to you by PIMCO.
To me, ambition is drive. It's the fire in your belly. I didn't go to college right out of high school. I worked full-time while doing school full-time. Somewhere along the way, I got bitten by the journalism bug. No one's going to give you your dreams. You have to roll up your sleeves and work hard to achieve them. Money doesn't make the world go round. Information does. And CNBC is the great economic equalizer because we provide that information so you can make the decisions that are right for you. CNBC is an adventure beyond my wildest dreams.
Want to make some extra money but not sure where to start? CNBC Make It will teach you the skills to earn passive income online. Take our new online course that will help jumpstart your business idea. Get expert advice and hear real-life success stories.
Soon, you'll have the tools that you need to start your own passive income business.
Learn how to start generating additional income right now. Register at cnbcmakeit.com/passive income today.
The Power Plays are here, breaking down the markets with updates and deep dives. What's moving now and what's next for your money? Sarah Eisen, Carl Quintanilla, Money Movers, weekdays, CNBC.
bucks after an initial run higher leading up to President Trump's White House win. Bitcoin is down now more than 7% since he took office, interestingly. Joining us to discuss the crypto market, Anthony Scaramucci, founder and managing partner of Skybridge Capital. Good morning to you. Happy post-Super Bowl. I assume you were an Eagles fan, by the way. I could be wrong about that, Anthony.
Well, I'm a Jim Cramer fan. So
Okay.
if you're a Jim Cramer
go.
fan, you gotta root for the Eagles. So congratulations to Jim.
And by the way, we should mention not only congratulations to Jim, but I think this is a birthday for Jim too today. We should wish him a happy birthday. And he just got a big present, obviously. The Eagles gave it to him. So there. Happy birthday, Jim.
Well, happy birthday, Jim, and congratulations to the Eagles.
Anthony, what do you make of just the way Bitcoin has moved? We're at 97,000 bucks right now. Call it 97,500. It has moved down. Obviously, it was on a huge run. But when you think about the floor, we've heard people say the floor might be 70. I don't know if you think that's accurate. And then obviously, you know, people talk about the sky being the limit when it comes to the ceiling.
Well, listen, you know, Andrew, I began my Bitcoin journey about 5 years ago, and I've been tarred and feathered and praised as it goes up and down, and you oscillate between genius and dummy. But I think that Bitcoin now is representing where prices should have been in 2022. And said differently, if you look at the November Bitcoin futures approval, just studying administrative law, the spot ETF should have been approved sometime in the first quarter of 2022. So all of that delay caused a lot of that price damage. And so I see it here as the community seeing itself getting propitious, decent, middle-of-the-road regulation. And if you look at the people that the Trump administration has put into those positions, I think you end up getting that. And so 97,000, 98,000 is sort of where I thought we would be 3 years ago. So the real question is, will the institutions enter the game? And I think you see some of the endowments starting to do that. We know some of the sovereign wealth funds in the Middle East are quietly doing that. And so I think it's going to be a very good year for Bitcoin.
Where are you on this strategic reserve idea, if you were a betting man?
Well, I think it'll likely happen at a small level. I think David Sachs has been very smart to delay it. I think the executive order showed good judgment because you want to get the buy-in from the Republicans and the Democrats, not just one party. You'd hate to see a strategic reserve going into place, Republicans lose power, and then the Democrats pull the rug on Bitcoin and take it out of the strategic reserve. I think you need to get buy-in on both sides. I think it was very smart of David Sachs to make sure that there was a 6-month debate and 6-month analysis of this. But I do think you get something. Remember, we have 27 other things in our strategic reserve. It's not just gold and oil. There's trace minerals and other things that the country reserves. I think this is an asset that the country will want to own.
Can I ask you about Ethereum? Only because Don Jr. was out there saying it's going to go up. Let me tell you. I assume he has some of it. But do you have a take there?
Well, we do own ETH in small sizes. We're much bigger Solana fans than we are ETH. We don't have a negative opinion of ETH. My partner in law school classmate John Soulos is sort of an ETH maximalist, so he's got it in our portfolio. I think that Brett Messing and I just think that Solana is faster. It has lower gas fees. And I think it's the one that's going to win the race, if you will, in terms of going into the tokenization world. Right. If Larry Fink is right and we end up tokenizing stocks and bonds, I think Solana would probably be a more obvious choice.
Anthony, where do you land on this whole meme coin phenomenon? I asked, we were joking. It's not such a joke. A couple weeks ago, someone made this Sorkin coin, which, by the way, has, I don't want to say happily or unhappily, but it's dropped in value. I have nothing to do with it. But, I've been following Dave Portnoy, who put out a meme coin during the Super Bowl weekend. It's called Jail Stool. And it's also dropped in value now. But, I mean, it's still, it's got a market cap of $82 million, which is remarkable. I think, though, at one point it might have been, 4 or 5 times that. And I just wonder whether you look at that and say, these are sort of great signs because they're engaging people in all of this,
this new world of crypto, or you think that it turns people off ultimately? What's your take? I mean, a lot of people are having fun with it, but if fun is sort of in the eye of the beholder because some people are making money, and I have to imagine others are not.
So literally, I have like a post-it on my computer, Andrew, please don't talk to Joe about the Trump meme coin. It's like right there below the camera. So I'm really doing the best I can not to talk about this stuff.
Notice I didn't talk about DJT. I'm talking about Mr. Portnoy.
We're talking about
this category.
We're talking about the Sorkin coin. There's no mooch coin.
No, there's no mooch coin, Joe.
Not yet.
But if there is
There
a
will be in about an hour,
mooch
probably.
coin, Joe, I expect you to be the first buyer, and
I would definitely.
I'll make sure you're involved in the ICO,
Can
Joe.
we do it together somehow? We could cover the whole world that way.
Although, Joe, you'll be locked up for like 10 years in the mooch coin. Okay, it'll almost be like the jail coin, where you'll be locked up in the mooch coin in jail. But
you got to hold it for that long, like a lockup period. Literally a lockup.
That's so interesting, by the way, about about how Portnoy was doing it, which was he was saying, I'm not going to sell until it gets to, what, $500 million or $1 billion or something.
I'm at a loss for all this. Why does the Sorkin coin have any value? I mean, you're a wonderful person. But
I think that's the question.
That is the question. By the way, even I would ask that question.
I don't think you'd ask it quite that way.
Well, this is the stuff when Becky is interviewing Warren Buffett and he's talking about cryptocurrency, this is the stuff that I think would aggravate him. I think if you're looking at this stuff, these are gambling tokens effectively, and there's a fury around them, and there's a tulip mania about them. And I think in the minds of some of the older investors, it causes contagion onto Bitcoin. People think, okay, well, maybe Bitcoin is just a very big meme coin.
Right.
But
what about the one that's called poop coin? I mean, there's that one was trading higher.
I don't know any poop coin or jail bond or jail, whatever it's called, coin or Trump
jail
coin.
Jail stool.
Okay, I own Bitcoin, Solana, Avalanche. We have a position in Polkadot and things like that. And these are assets that we think are going to grow in the world of tokenization. Of course, we believe that Bitcoin is digital property and a store of value. But you've got, we gamble. We've got 5,000 years of proven history of gambling, and these coins represent that. And I think when you have coins like that, it does slow down the older demographic towards adoption of these things. But I think they're non-consequential long term. We didn't mention Dogecoin, which frankly is another meme coin.
There's crap coin.
And so you got a lot of meme coins out there, and I think they distract from the value and the purity of something like Bitcoin.
And I got another one. This is going to sort of mix the idea of business and policy in one place for you, which is you spend a lot of time with sovereign wealth funds, some of whom are invested in your fund, and now that there are a big question about whether the United States should have its own sovereign wealth fund. Historically, sovereign wealth funds have come from countries that have a surplus of money. And so I'm curious where you stand on the idea of a taxpayer funded, effectively, sovereign wealth fund.
Well, listen, I think the reason why we've never done it before is because of the imbalances that we have. You'd have to get Howard Lutnick, our Secretary of Commerce, to discuss why he thinks it's a good idea to add on more debt. Remember, the cost of our capital is roughly 4.5%. And so Howard's going to have to go out there and find things that are yielding more than 4.5%, because it's not surplus money that we're going to be putting into that fund. But listen, he's a very smart guy, very talented, know him for a long time. I'm sure he could make a compelling case why we need a sovereign wealth fund. I just think from a capital allocation point of view, if your borrowing costs are 4.5% and you're trying to bring your borrowing down, and I think people, I'll say something that Joe will probably fall off his chair. I think people respect the Trump administration and Elon Musk trying to uncover waste in the system. I think we just have to have a judicious process and remind people that we're in a constitutional Republican democracy. So therefore, we have to have that system in place where everybody feels comfortable with the process of terms of uncovering this stuff. But at the end of the day, you got a 4.5% cost of capital roughly. If we can hit a higher hurdle than that, I have no problem with a reserve like that. But again, I would be more interested in getting the debt down and getting the operating debt down. You can't spend $2 trillion a year like we're doing. It's unsustainable, and it's unfair to our children.
I'm still on my chair. I have told you so many times, The lights are on for you. The lights are left on. I leave the lights on all night long in case you ever decide.
He has a dimmer. He has a dimmer.
It's on a dimmer.
At the wine
but in
party,
case
Joe. You know, I had such beautiful
I was in a
wine
hospital, I
there
think,
for you.
which is actually better than having an argument with you. I'd
You
rather
could have
do
had
that
a glass of wine after that, Joe.
I'd rather have my gallbladder out than have another argument.
I still love you, Joe, even though we don't agree on everything.
The
I just
lights
want to
are
make sure
on.
you know the love is still there, Joe.
You sound like Motel 6.
Yeah, the lights are still on for you.
Anthony,
You're welcome anytime.
We love having you on the broadcast. We very much appreciate it.
The Big
Hope to have
Ten.
you back. Very
The
good
Big
to see
Ten.
you.
Becky, I'm sorry that you have to put up with this, Becky, but I'm with you. I'm your advocate, Becky.
Good to see you, Anthony.
All right,
Lights are on. Nobody's home. Up next.
I'm here, Joe. Trust me.
Up next, last night's game may have been a blowout, but advertisers will still be calling it a win. Yeah, right? Win, lose, crappy game, good game, they still win. A look at last night's buzziest ads. That's next. Then
Unless
later,
you were on in the fourth quarter.
Yeah, oh my God, yeah, right. Exactly.
Shut it off.
Later, McDonald's reporting just a short time ago. Street reaction to numbers and the company's outlook is coming up. We'll be right back.
CNBC. Live ambitiously.
For as long as I can remember, I have always considered myself pretty ambitious. I always wanted to be a television journalist. When I started out covering foreign exchange, I actually taught myself how to trade currencies because I wanted to understand what people wanted to know. My grandfather, who was a Holocaust survivor, inspires me every single day. And growing up, he always used to have CNBC on in the background. Every day is fun covering business news. Every day is different. It is never boring.
Good money.
Everything will seem legit until it wasn't.
Good times.
The lavish lifestyle, the houses that they're used to.
Is never enough.
Someone who has a goofy social media presence could be laundering $4.5 billion worth of Bitcoin.
Fame, fortune, and fraud.
His stories were so good, they've all fell for them.
I believe in getting justice.
American Greed on CNBC.
Diane von Furstenberg's name is synonymous with the wrap dress. This iconic piece of fashion made its debut in 1974 and was an immediate sensation, with 1 million of them being sold in just 2 years. 50 years later, the wrap dress is still a bestseller and a wardrobe staple seen on everyone from royalty to celebrities.
I created the dress, but truly, the dress created me. So why? Well, first of all, the fabric. The fabric was this jersey that molded the body. Then it was the prints. They always move. It changes your body language. And so the more people notice it, the more happy you are with yourself. Somebody said something very funny once. It's the dress that you get the man in and his mother doesn't mind. So it's both sexy and proper at the same time.
Frank Holland, Worldwide Exchange, CNBC.
McDonald's shares trading higher this morning after quarterly results. You can see that stock right now up by about 2%. Joining us right now is one of the analysts who will be on the call a little later this morning, Sarah Senator, who is Bank of America Securities Senior Restaurants Analyst. Sarah, the loss in terms of the sales decline, it's not a loss, but a sales decline was the biggest in about 5 years. But there's a lot here that the street likes. What surprised you to the upside this morning?
Well, I think to your point, the focus that most of the street has is on same-store sales growth. So revenue can move around depending on currencies, depending on the portfolio, how much is licensed versus company operated. But so what you're really looking for is a measure of the health of the system. And there we've seen international strength. Perhaps, given what we've heard from some of the other international companies more recently, perhaps not as surprising. But nevertheless, this is the first quarter in some time where McDonald's has actually beaten same-store sales expectations for its licensed market, which is where the Middle East is reported.
The U.S. comp store sales, though, were a little weaker than had been anticipated. I think traffic was good. Maybe sales were down. Is that discounting to try and get people back into the stores?
Yeah, that's exactly right. So the U.S. is still the biggest single market for McDonald's, about 40%. The operating profit, and that is a place where we've had some softness. To your point, traffic was positive, which is an indication of, yes, to some extent, discounting. We know that the $5 meal deal that they have been running for a couple quarters now has an impact on same-store sales through a lower check. And as they've launched this McValue menu, that's likely having, amplifying that impact where, either people are trading down or new people are coming in, but their average spend is lower.
I mean, I get it for them to continue that sale, particularly as they were dealing with the fallout from the E. coli situation with the slivered onions back in October. I've seen criticism from some analysts about that strategy. What do you think?
Well, I think, to your point, I don't think they have a choice, right? So,
right.
They can either choose to not have the value, in which case they won't get the transaction growth, or they can offer the value, which is what consumers want. I think, one of the things that we've observed over a couple of years is that McDonald's, it's been a largely check-driven same-store sales number, and they've taken a lot of price over time. Now that inflation has come down sharply, the industry as a whole is just not taking prices up as much. And certainly, McDonald's is a leader there. What I would say about, the transaction growth is we know that some of these lower price points are particularly attractive to some of the lower income consumers that have been under more pressure, because of higher inflation or various reasons. And so if McDonald's wants to be a value to all of its customers, and frankly, if you have, as many stores, 14,000 stores in the U.S. as McDonald's does, you do need to have broad appeal. And that requires, price points and value that are attractive to everyone. But, what we've said is that this is going to be a reset year for their same-store sales in the U.S. You're going to have check pressure, and then you hope to grow from here.
We've got to run, but do you buy the stock here just below $300?
Yeah, we have a neutral rating on the stock. This is a very good company, but again, we're going to continue to see check pressure as they reset their value proposition.
Sarah, thank you for joining us today.
Thank you.
It is just after 8 a.m. on the East Coast, and you are watching Squawk Box right here on CNBC. I'm Becky Quick, along with Joe Kernan and Andrew Ross Sorkin. Among today's top stories, President Trump says that he is planning to announce new 25% tariffs on steel and aluminum imports. Trump teased that while on Air Force One yesterday on the way to the Super Bowl. The president also said that he will announce tariffs this week, matching all other countries' tariffs on the United States. It's what he calls reciprocal tariffs. Meantime, China's retaliatory tariffs on the United States going into effect today. The rate for those is 15% on imported U.S. coal and liquefied natural gas, and other charges on farm equipment and crude oil. And employees of the government's Consumer Financial Protection Bureau have been told to work from home this week because the agency's Washington headquarters will be closed. The future of the Bureau very much in doubt. It's been targeted by President Trump and Elon Musk. The CFPB homepage is down this morning. That follows an email over the weekend from the newly installed acting CFPB director. He instructed staff to suspend nearly all activities, including supervising financial firms.
By the way, before we, another headline, because there's just a wave of them that we haven't even mentioned, is that Trump has told the Treasury Department to stop making pennies.
Yeah.
I don't know if you saw that.
That's been a wild company.
We're talking about it. It costs 2 cents.
I think it's
for every penny.
3.7. I think it's 3.7 cents to make and distribute.
They do it at a loss of $85 million a year, and he says every penny counts.
Well, hold on to your pennies, man. They're collector's items now.
They might be.
Yeah.
No more pennies.
Only you pick up pennies, right?
I pick up a penny.
If it's heads.
Oh, I pick up a penny if it's heads.
I don't pick up tails.
Really?
No.
Interesting.
Bad luck.
Okay, so maybe no more pennies for us.
I don't know if it's bad luck, it's just not good luck, and then why do you want it?
Meantime, 5 former Treasury secretaries warning a New York Times op-ed about the activities of President Trump and Elon Musk's Department of Government Efficiency at the Treasury Department. The piece was written by former secretaries of the Treasury, including Robert Rubin, Larry Summers, Tim Geithner, Jack Lew, and Janet Yellen, all of them signing this op-ed. They're warning about political actors from DOJ assuming control over what has historically been the job of nonpartisan civil servants. After Trump's inauguration, Musk's team quickly gained access to Treasury Department records, raising data privacy concerns and fears that the team could stop lawfully granted payments from going out. An example, the Associated Press reported last week the DOJ officials sought access to Treasury systems to prevent money from flowing to the U.S. Agency for International Development. In the op-ed, the Treasury Secretary is raising concerns over conflicts of interest and data security, but they say constitutional issues are more important. They write the following. They say, quote, "It is not for the Treasury Department or the administration to decide which of our congressionally approved commitments to fulfill and which to cast aside." So the debate now moving to 5 of the most famed Treasury secretaries.
Democrats.
All Democrats,
but my favorite...
It takes a lot for them to all get together and do that.
I don't think so. But no. But I did like my favorite quote was, said with a straight face, all of the nonpartisan civil servants that are involved in all these things. That's a beaut. Futures this morning. Let's take a quick look. All the nonpartisans at all the agencies that we know now we're not quite as nonpartisan as we wish they would have been. I mean, you can give me that much, can't you?
I can give you that there was clearly partisan folks inside a lot of these
on both sides,
making a lot of decisions that you may not want them to make.
Right. Let's get to Mike Santoli, totally nonpartisan at all times. Mike, what's going on?
Yeah, Joe. Well, we got a little bit of a bump in the futures. It's been a fun pattern the last few weeks, down each Friday, and then the trading low for the following week was sometime on Monday, so it was kind of a buy the dip Monday. Maybe we got that overnight last night because futures did end lower. I have the S&P 500 here along with the 50-day moving average to show a really kind of calm and steady index level trend right here. You have the 50-day average kind of flattening out, but still pointed higher. It's still in an uptrend, but only about 60% of the stocks inside the S&P are in their own kind of technical uptrend. So it's obviously kind of firing on some cylinders, certainly just enough to keep us above 6,000. Take a look at a couple of kind of economic bellwether areas that were really strong in the first year and a half or so, almost 2 years of this bull market, semiconductors and home builders that really have faltered. So it's kind of, in its way, impressive the S&P 500 has hung in here. Financials, lots of consumer cyclicals still hanging in there, and then just enough of the mega cap growth stocks to keep things moving forward. A lot of divergence among those big Mag 7 type names. Take a look at how you guys have been talking about Meta. Here it is against Apple, where it's kind of fun that it's been over the last year or so, kind of moving in sync, and then Meta just completely kind of takes flight to the upside. Apple has faltered. Microsoft hasn't done a whole lot. Part of this, there's so many things moving in Meta's favor on a trading basis, one of which is the earnings estimates keep going up. And obviously, there's a lot of other elements going on in terms of how AI applies here. But also the valuation of Meta before this was actually at a discount to the likes of Alphabet. And so it's kind of getting revalued higher. We'll see, just exactly how stretched this move gets, Joe.
Okay. That is really something with Meta. What was the low on that a couple of years ago? You would know. Was it 80?
Yeah, certainly it was down in that area. I keep,
it's 700 now, Mike.
Yeah, it's amazing. Do you know what's also, we don't talk a lot about it, but the fact that Zuckerberg owns a chunk of it, like it's got a smaller representation in the S&P 500 than its aggregate market cap would tell you, because you have that founder's stake in there. The index doesn't buy all of it. And so it does seem as if it sounds ridiculous, but it's almost like there's a little more scarcity value there.
Right. Okay, Mike Santoli, thanks.
Yep.
Andrew.
Coming up, a pair of big interviews you do not want to miss this morning. White House National Economic Council Director Kevin Hassett's going to be our guest. We'll talk about the jobs report, DOGE, the president's new tariff plans, and so much more. And then we'll talk to Take-Two Interactive CEO Strauss Zelnick on the state of gaming and Grand Theft Auto 6. Stay tuned. You're watching Squawk Box, and this is CNBC.
CNBC. Live ambitiously.
You want to talk business? Meet me in the On-Board Lounge.
Watch the markets open. Brought to you by Emirates.
ECB President Christine Lagarde talks policy.
I don't care how I'm remembered. What I care about is getting the job done.
Innovation.
I like to draw the line between the underlying technology, which is fascinating, and the assets that have gone up and down and up and down.
And the return of Trump.
I think what we need to do here in Europe is to be prepared.
All in the CNBC conversation.
Ambition to me is the American dream. It's why my mother came over from Taiwan. It's why people watch CNBC, because they want a better future. I was working as an analyst in Shanghai when my company landed in the news on accusations of espionage. I decided right there and then that I wanted to be on the other side reporting on the news. I love bringing transparency to complicated topics. I think it's so important for us to deliver the right numbers to our audience so they can make better investment decisions. San Francisco was built on ambition, a belief that anyone can disrupt any industry and change the world.
The Power Plays are here, breaking down the markets with updates and deep dives. What's moving now and what's next for your money. Sarah Eisen, Carl Quintanilla, Money Movers, weekdays, CNBC.
Our next guest joins us on President Trump's vow now to impose new tariffs on steel and aluminum. The White House's reaction to Friday's softer than expected jobs report and much more. Let's welcome White House National Economic Council Director Kevin Hassett. It's good to see you, Kevin.
Good to see you, my friend. I'm glad you're feeling better. I missed you last
feeling
week.
Good.
Yeah, good.
Feeling good. Got some adjusting, but I didn't need that organ.
Can we talk about the Treasury letter first? I know we were talking about something else, but you guys just showed it to me. I'd like to respond to it if you don't mind.
Yeah, I figured you would. I barely said anything, but I got in my 2 cents anyway from all of our nonpartisan civil servants at the Justice Department and all those federal agencies. But go ahead, Kevin.
Do you remember all those CIA guys that lost their security clearances? This letter reminds me of that. There's so much misinformation in it. Let's just make it clear. The Treasury Secretary, Scott Bessent, is in charge of the Treasury. The Treasury Secretary has found that the controls for spending of the previous administration were unacceptable. that they were sending money out without knowing where the money was going. They were sending money out without flagging, what it was for. They didn't check before they sent the money out whether it was appropriated. And as we go in and look, we're finding lots of things that shouldn't have been sent.
Wait, so things that weren't appropriated? Kevin, that's a big deal.
It could, the point is they could be appropriated, but there was no guarantee. They weren't putting in a control to make sure it was appropriated even. So you've got to add up all the, because they're sending you checks like 50 at a time, 30 at a time, 70 at a time. And so they're not saying, oh, yeah, this adds up to this, and so that's why you can send it now. And so there's a lot of work to be done to clean that up. Treasury Secretary's doing it. I think, Elon Musk is in the office next to me. He's not in control. That's the other thing I want to say. This idea that there's a puppet master telling the Treasury Secretary what to do, and therefore all the Treasury Secretaries need to be like alarmed. That's just left-wing media, poppycock. It's just not true.
Can I just clarify that we're questioning the controls, not whether or not the money was actually appropriated. We don't know that for sure, but that's what this is about.
But if you don't have controls, you have to then add up what you spent and make sure that it was aligned with what was appropriated, and they weren't even doing that.
Hey, Kevin, here's the question that I would ask, which is I would imagine most, if not all Americans, support the idea of looking at where money's going, making sure it gets to the right places, making sure fraud and abuse and all of that is happening, that it is eliminated. I don't think there's any question about that.
Right.
I think the question mark right now is about the transparency of this particular process around the individuals who are engaged and involved in this particular activity, whether they have clearance, whether they've been vetted, how that's worked, and what kind of transparency that there is around that process. I would only just say that to the extent that, and I think you and I actually agree a lot about what needs to happen here, and I imagine that actually the Treasury Secretaries who wrote that letter or that op-ed agree with what needs to happen. Maybe they don't. I don't know.
There are a lot of good
but I think it would help
letter,
enormously for the credibility of the entire exercise, so that all Americans feel really good about it. That there's a little bit more transparency around the individuals who are participating in it. Where it's being fed in terms of AI and other things that makes people nervous. All of that. Could that be done to try to actually make everybody get behind what you're doing?
Yeah, thanks for that. And I'll give you some transparency. Okay, so what's going on is that we have antiquated computer systems that make it hard for people to do their jobs and follow up the things that taxpayers and these former Treasury Secretaries want them to do. And I don't know how many exact DOGE employees there are in the Treasury Department. You could ask the Treasury Secretary, but I don't think you could count them on one hand. And they're just helping people get good computer systems so that we can check and see what the numbers really are. And the point is, why is everybody so anxious and upset about the fact that we're going to get to the bottom of what we're spending our money on? Why is that a partisan thing? Why are we making up fake things about what Elon's doing? Because we're trying to just see where the money's going. And I think it's probably in the end we're going to find that a lot of money went to bad places.
You're wondering why there's a lot of people who don't know where the money was. You're really asking that a rhetorical question?
If you're hiding where the money, if you're hiding where the money's going, then how come? How come?
I think I can think of a lot of reasons a lot of people would be not wanting.
So the one thing I'd like to say is you guys should start a poll. I can't do this. Right? I'm a government official. Of over/under on how much money that Scott Bessent finds that's actually spent that was misspent. Just you guys should start it.
Fraudulently?
Or at least more than appropriated. It's going to be a lot. It's going to be a lot. It's going to be a lot. But we have other stuff to talk about, guys. I know you want to talk about steel tariffs before I've gone to.
Can I just ask one other question to Kevin, though? Because it was something we were talking to Tom Emmer about, which is, we are seeing that some of these payments, and we're looking going, oh, these payments don't seem to make sense. For example, I will use just one example, and I'm not picking on them. I know they're a competitor of ours, but Bloomberg, people looked at these Bloomberg subscriptions and said, why does the government have Bloomberg subscriptions? And I thought to myself, I want a Kevin Hassett to have a Bloomberg terminal if he needs it. And I would want someone at the Treasury Department who's selling treasuries and bonds to have access to a terminal. And so I only say that because I think there's some nuance to what we're seeing. There are going to be subscriptions and other things that people may have questions about, but there is probably a need for some form of information. I would actually be upset if you didn't have it.
But even on this one, okay, so let's just go inside baseball. That I've found that even like within the complex that we had too many of those subscriptions. And I think it's completely sensible to have a few guys that really know how to get the answer quick to more senior people so that you can aggregate demands for information from that. And so like, specifically on that matter that you talked about, we're saving the taxpayers money. I just want you to know.
Look, if ultimately you get rid of most of the subscriptions, but you still have enough, that's fine too.
That's what we're doing.
You know, the money's eventually going to end up in Mike Bloom lining his pocket so he can do more climate change, hysteria, and gun control. Yeah, come on.
Some amazing things for this country and for the city.
Blah, blah, blah. All right.
Oh, but come on. I mean, I think even you would agree that he's done amazing things for this country.
Remember when we had his campaign guy and say, just wait till this really takes off? He'd be peaked at about 1.5%. So I don't know. The rest of the country didn't feel quite as
tariffs? Can we get to tariffs before
I want to talk about steel tariffs. That's why.
Kevin's going to let me keep going. Go ahead, Kevin. Does it make sense?
Yeah. So President Trump has made it clear that an important part of an America First golden age is steel production. And when we put the steel tariffs in last time, you might go back and look right after the steel tariffs went in. It didn't cause manufacturing to go down. In fact, manufacturing jobs the next couple of years went up about 120,000 jobs right after the steel tariffs came in, and we could talk about why. And then under President Biden last year, we lost 100,000 jobs. And one of the things that's happened is that there was a lot of increased steel capacity after the steel tariffs came in, which, remember, were put in there so that if in case of war, we can have the steel we need to fight a war. That's what the president said. It was a 232 decision. And so steel capacity went way up. And then all of a sudden, there's waivers for this and waivers for that. There's hundreds of thousands of waivers. And so that the steel tariffs that were so effective before have been overwhelmed with waivers. And so President Trump, as he can do, is like, okay, so let's just stop the waivers, and he'll do so at a time of his choosing. The order is not out yet, but he said on, to us and on Air Force One that this is a high priority to make sure that America is ready for whatever may come in the future, and that we've got a strong and vibrant steel industry.
So how are you going to even the playing field? You talk about tax reciprocity around the world, and the president, Trump, is obsessed with balance of payments wherever they are. Some people don't think that I mean, we're a wealthy country. We're not going to change our balance. We're definitely going to consume more than most of our trading partners because we're able to. Kevin, is that the metric we should be using to decide whether there's an imbalance and whether we need tariffs from Mexico or for Canada or wherever?
The reciprocity, there are different ways to think about reciprocity, but if we're talking specifically about tariffs, just recall that almost every trading partner has much higher tariffs than we do. In fact, the only trading partner that's about where we are, and there's Canada and Mexico who are part of the trade deal, but outside of that, the UK has about the same tariff we do. The EU it's 2 to 3% higher. Taiwan it's 10 or 11%, and India, and we're meeting Modi soon, has got a lot to talk about with the president because they have tariffs that I think the trade weighted average is a little bit short of 20. Now I'm running it out of my head, so don't give me a Pinocchio. But they have high rates that are enormously high. They're lockout rates, and so President Trump believes that at the very least everybody should agree that if they're charging us 20, then we should charge them 20, and then if they go down, we'll go down. But that's the idea of reciprocity in the tariff space.
Hey, Kevin, can I just ask you, yesterday President Trump said something on Air Force One on his way to the Super Bowl about how maybe there was something at Treasury where we didn't have as much debt as we thought. Is that referring to debt that's already been issued that we might recall or say isn't needed, or is it more akin to what you were talking about at the top, which is...
It was the top. It was the top. As we're getting, back in the day, radiologists used to say you're getting a wet read, right? Like they'd get the film out and then they'd look up and they'd say, oh boy, it doesn't look so good for Kevin. Well, the wet read is a lot of money. And we'll see. We've got to get to the bottom of it, but it could be that there is a lot of money being spent that doesn't need to be, and that wasn't appropriated, so therefore it'll reduce the debt when we uncover and stop those payments.
President comes up with a lot of stuff. Some of it seems a little bit impromptu. If you add all the tax on tips, tax on Social Security, extend the tax cuts, take off the cap on Social Security, you add it all up, and in your previous life, you might be pulling your hair out, Kevin. There's a lot of stuff that would be...
I think that everything you just talked about, I spoke with him before he said it, while he was sitting in the car somewhere.
You don't think that it's not all possible without running up a big deficit, is it?
Well, it depends on what we do with spending, and it depends what we do with taxes. But the thing I could say, Joe, is that the president understands that if you want inflation to go down, which is one of his highest, if not his highest priority, you know, incomes the first couple of years under Biden dropped $2,000 per person after going up $6,000 per family under President Trump because of the inflation. So he wants inflation under control. To do that, you have to increase supply and reduce aggregate demand. So you got to cut spending and you got to increase supply. And the way you increase supply is you lower the marginal tax rate on labor and you lower the marginal tax rate on new investments. And so for labor, if you look at the people who aren't working who really want to be, it's people who have really ridiculously high Social Security tax rates. If we've got somebody who can work more overtime, that's increased labor supply. That helps them make a higher income and it helps reduce inflation because we have more supply. So President Trump's strategy is 100% sensible, and it's all about fighting inflation and just delivering prosperity.
100%.
Again, as opposed to 100%. That's 100%. Okay, like so maybe there's something he talked about once that was about something else. He doesn't go on, but I'm telling you that when we talk economics,
he thinks
our
outside
objective
the
is
box.
increase supply. We want increased supply and lower aggregate demand. That'll give us, you know, wealth for the people, wages for the people, and lower inflation. And that's what I mean. That's 100% is what the strategy is.
I mean, he's told Brett Baer he really is serious about Canada as the 51st state. There are some things that you're laughing, but are there times where you're like coming up with ways to defend some things that seem a little bit maybe outlandish?
When the U.S. was founded, how many states did we have?
Hey, Kevin.
And how many do we have now? And so is it outlandish? Is it outlandish to dream?
Some of it seems a little outlandish.
I don't think so.
I mean,
so
I
it's
like
crazy
it
to let Hawaii and Alaska come. It's just crazy. It's outlandish that we brought Alaska in.
Canada's really mad.
I got one for you, Kevin.
But I think he's telling you that they are serious.
How do you feel about, Mike Lee took to X yesterday and said that he wants Ron Paul to be the Fed chair, and your new roomie, Elon Musk, who's next door to you, apparently, said this would be amazing. How do you feel about Ron Paul in the role of Fed chair?
I love Senator Paul, and President Trump will decide who the Fed chair is when...
No, Ron, not Rand. Ron.
Yeah, we're talking about Ron.
I thought you said Rand. Yeah. Okay, Ron Paul. Well, okay. But the president, if he decides Ron Paul, then we'll understand why he decides that.
It sounds like when you're not necessarily on board with that. Okay, Kevin. Thank you.
Kevin, you
He's a
are
good sport. That's the thing.
We're all good sports. We have to be. We have to be because we're talking about things that. I mean, I like it. We're in the news business. I mean,
that is true.
Kevin Hassett, I need you a lot to come on. I do.
Of course.
You make me seem normal. Thank you. See you later. Bye.
All right, when we come back, why Amazon, trying to be the Switzerland of AI, seems to be a bet that is paying off. Kate Rooney will have that story for us. Plus a conversation on the current state of the video game market and anticipation for Grand Theft Auto 6. It is building. So's the stock price. We're going to talk to Take-Two Interactive CEO Strauss Zelnick. Stay tuned. You're watching Squawk Box, and this is CNBC.
Today's Most Active Stocks Update is sponsored by Interactive Brokers. 150 markets, 33 countries, 27 currencies. Today's Most Active Stocks Update was sponsored by Interactive Brokers. Trade worldwide from a single unified platform.
Live from the New York Stock Exchange, Halftime Report, CNBC.
In the age of digital disruption, get fresh business perspectives on the fast-changing world of tech, innovation and startups from one place. CNBC.com/technology.
Energy is set to be one of the hottest topics this year as the artificial intelligence boom, global geopolitical strife and US President Trump's return to office all put oil and energy alternatives in focus. Join me at India Energy Week, live from New Delhi as we explore the future of energy only on CNBC.
I think ambition is really an extension of faith. If you first off believe in yourself, that gives you the power to chase your dreams. My ambition starting out was to have a career, not a job. I wanted to be excited to go to work every day and go someplace where I could grow, learn, and engage. CNBC viewers are definitely ambitious, and I think most of them see their money as a tool, a way to pursue their dreams and pursue their goals. I hope to always be a clear, accurate, and investable voice for all of our viewers. You'll learn a lot here at CNBC. It's also a lot of fun.
get over to Contessa Brewer again. Now she joins us with some top pre-market stocks to watch. Hey, Contessa.
Hey there, Joe. Yeah, McDonald's, of course, missed earnings this morning with revenue coming in just shy of consensus at $6.39 billion, adjusted earnings per share of $2.80. Wall Street was expecting EPS of $2.84. The fast food giant has really struggled here in the fourth quarter with an E. coli outbreak and same-store sales slumping 1.4% in the U.S. You can see the shares pre-market, though, up 1.3%. The call has just started about 20 minutes ago, a focus on the value menu. We'll have to see how those share prices perform throughout the day. All right, we've got steel stocks climbing after President Trump told reporters last night that he'll impose 25% tariffs on imports of steel and aluminum into the U.S. Of course, that broadens his restrictions on some of the country's top trading partners, including Mexico and Canada, which are among the largest exporters of steel and aluminum to this country. The president did not say when these duties will take effect, but he added he would formally announce those plans later today. You can see how the shares are reacting. U.S. Steel up 3.9%. You've got Nucor, Cleveland Clinics. Look at that, up 8.5%. Alcoa up 3% as well. All right, so Meta is laying off 5% of its workforce across multiple countries, according to an internal memo reported by Reuters. Those cuts reportedly will target low performers, even as the tech giant accelerates machine learning engineers. Shares of Meta have been on a tear. They're closing in each of the last 15 sessions, up more than 50% over the last year. They've outperformed all of the other Mag 7, right now moving about 1% higher on the day. We'll see if that momentum keeps going up here, Joe.
Yes, we will. Contessa, thanks for being with us this morning and earlier. Contessa Brewer, final check on the markets. Looking for a pretty solid opening this morning after what was not such a great day on Friday. There, we're looking at 276 now on the Dow, over 200 on the NASDAQ. Look at Treasuries. Hearing that we're in a 4 to 5% range, 448. We are right in the middle. Should I get a haircut? If I let it go,
I'm polling the audience?
I'm going right now because
I would go for one.
They got to cut off. It gets very frizzy on the side. Will this prove it's not a wig? If I come in and it looks totally different? We put that to bed.
I don't know about the Velcro, but sure.
Make sure you join us tomorrow. Squawk on the Street is next.
Good Monday morning. Welcome to Squawk on the Street. I'm Carl Quintanilla with Scott Wapner, Leslie Picker here at Post 9 of the New York Stock Exchange. Kramer and Faber have the morning off. And speaking of Kramer, congratulations to him and his Philadelphia Eagles on last night's Super Bowl victory over the Kansas City Chiefs. We also wish Jim a happy birthday today. Man, what a birthday present. A lot more on the Super Bowl coming up. Futures are green coming off Friday's sell-off, and looking past these headlines about new tariffs and retaliation, we're going to get to all of it. Our roadmap this morning goes like this. Trump's tariff threats, the president teasing some new levies on all steel and aluminum imports, even as China's retaliatory tariffs kick in.
Plus, new warning signs about the strength of the U.S. consumer. McDonald's posting its biggest domestic sales decline in nearly 5 years.
And shares of Meta Platforms up again in pre-market. The Mag 7 stock aiming for its 16th straight day of gains. Sweet 16.
Let's begin with this new week for the markets and the president's promise to impose these 25% tariffs on steel and aluminum imports. This is what he told reporters yesterday on Air Force One.
We'll also be announcing steel tariffs on Monday.
Tomorrow?
Monday, yeah, tomorrow.
What countries will those go on?
Everybody. Steel.
Including Canada, Mexico,
Yeah.
United States?
Any steel coming into the United States is going to have a 25% tariff.
What about
aluminum? Aluminum, too.
Meantime, over the weekend, a lot of coverage of various trade playbooks that other countries and continents are starting to assemble. The EU, we've heard from China, obviously. Brazil is a story on the wire about come at us and we'll have some retaliation. In some cases, not with direct tariffs, but targeted measures against, for example, U.S. tech.
Yeah, that was a story, I believe it was in the Wall Street Journal, about China targeting potentially on the antitrust side of things with U.S. tech. What I find so interesting about this weekend's developments is the fact that China is no longer even close to being in the top exporter of aluminum or steel to the U.S. That goes to Canada. Canada is the top exporter to the U.S. of aluminum and steel. And the reason for that is because there have already been such high tariffs in place on China for these metals, and therefore China has been exporting elsewhere, including to Canada, which takes that metal and then exports the more expensive version to the United States to be the top exporter of aluminum and steel to the U.S. So the whole thing is so fascinating. And to your point, Carl, as everyone kind of draws the, global world order and tries to figure out how this is all going to play out. It's so complicated.
We've seen this movie a little bit before. Obviously, the stocks that we just showed you on the screen are all higher. This morning, I thought we were going to queue up the Wilbur Ross Campbell's can.
Yes.
As we talked, back then about steel and aluminum tariffs. I think that probably lives on somewhere in the archives.
What was the line? Who's going to be bothered, right? Because of the penny or so additional cost to a can of Campbell soup?
Well, I mean, it kind of goes to the point that I'm making about the market reaction this morning. I mean, you would obviously expect steel stocks to be up, but the market itself, the futures are up.
Right.
Why? Because, well, we're going to we figured out, we've, wised up to maybe how to deal with all this. And the market has sort of learned its lesson about overreacting to noise and headlines, and then it's going to really figure out exactly what it all means before it reacts in some way. We learned that a week ago.
Right.
Right? You learned it a week ago. The market had this massive panic attack, a tariff tantrum in the morning, and then all was okay because the tariffs on Mexico and Canada were rolled back about as fast as you can say tariff.
I think that's really noteworthy, though, and what that means for C-suite confidence, C-suite decision-making on things like CapEx, on M&A. I know you were, I believe you put out the article in the Wall Street Journal about CEOs and kind of what this has done for deal-making, because there's just so much uncertainty that January was actually a much more muted month for big deals than a lot of people were expecting.
Yeah, it's interesting. I mean, Scott's got it exactly right. Market's been extraordinarily calm since we're really where we were just after Election Day. But here's the piece in the Journal for CEOs and bankers. The Trump euphoria is fading fast. And then over the weekend, again, the Journal, the mood of the American consumer is souring. So it's interesting how the coverage on the vibe is not quite matching the price action and certainly the pace of earnings.
Yeah.
I mean, blended earnings, we're now looking at, 16% year on year, much higher than we were at the end of January.
And tariffs were a big part of earnings calls as well in the fourth quarter, especially in certain sectors. I had a piece out last week about how tariff uncertainty can impact bank lending, which also has a follow-through to the economy and the risks to growth and so forth. So, Scott, I'm curious what you're hearing about kind of this potential disconnect between what it means for consumers and their sentiment, what it means for CEOs and their sentiment, and then the markets as a whole, which seems to be a little bit more kind of, we've seen the head fake, so might as well just ignore and focus on other things.
I mean, on the sentiment angle, C-suite for consumer, I mean, deal making's off slowest January in a decade, which was expected to be, you hit the ground running into 2025. That was part of the euphoria about Trump's victory once again was going to lead to this renaissance in deal making. And it still may. I mean, obviously, what are we, 6 weeks into the administration? But at least to start, because as corporate America is trying to assess the fallout from tariffs, well, consumers are too. That's why, to what you're talking about, inflation expectations last week in UMich were, a spike higher. Why? Well, I mean, are prices going to go up because of tariffs? It creates a little bit of a chaotic backdrop, a lot of uncertainty that whether you're in the C-suite or just a consumer trying to make it by every day with the price of eggs way up, obviously not related to tariffs, but bird flu, et cetera, it creates a little uncertainty.
And then I saw one economist point out the fact that, with aluminum and steel tariffs in particular, what does that mean for global growth? And if it does provide some sort of a dent to global growth, does that offset the potential risks for inflation? In other words, can consumers absorb some of the price hikes, or will they just stop purchasing some of the things where they see the price hikes leading to more of a dampening of growth effect?
Or do corporates absorb it in margins, right? I mean, that's another story, too. And you're beginning to see various efforts to lower expense structures. Meta, we're going to talk about Meta and some of these layoffs reportedly beginning today. They're coming from a position of extraordinary strength, and yet they're getting more efficient. And all of this sort of leads you to a 10-year that is not really straying far from 4.5.
Not to mention all the layoffs in the government right now and just the kind of like cleansing led by Doge of some of the offices there. We saw the CFPB over the weekend shut its offices. We don't know about layoffs there per se, but in terms of roles and responsibilities and actual oversight, it seems to be that has been pulled back dramatically. The office space too, essentially closed for now. So, you know, all of that put together, I think net will be an interesting story.
Although we're moving now, and this got reflected over the weekend, into a period where these court rulings, for example, the one on Friday about Doge and Treasury and irreparable harm, and then the pushback from the vice president, for example, who suggested really court orders can be defied.
Yeah,
and at what point does that challenge to what you might call rule of law get reflected in investment decisions and the interest in either foreign direct or domestic investment too?
That's a really good point. It definitely tests kind of the system of balances and certain checks there. And yeah, he said that essentially the executive power outweighs some of these rulings.
Look, I think the market is getting reasonably good at blocking out noise, what it deems to be noise, and focusing on the facts. And the fact is that earnings have been pretty good, and earnings growth has been pretty good at the top end of what the expectations were. And I think you're trying to look beyond that, and why you see the futures on a morning like this higher, also towards the 10-year note yield. You had the Treasury Secretary Bessent sort of jawboning that last week when he sort of was pushing back on this notion of what Trump addressed Davos as. I'm gonna, you know, demand that interest rates go lower. Well, I mean, okay. I mean, he can say whatever he wants, but I mean, how's he going to do that? Bessent last week in an interview was like, look, he's not demanding that interest rates go lower. We're more focused on keeping the 10-year down. So maybe that's got a little bit of a cap on the 10-year, as their focus is much more on that. But I think the market reaction this morning is just sort of like, you know what, let's just chill. Cut the noise out. Let's see what really happens, and then we'll figure it out as we go. Otherwise, the market will be down a lot more. On a morning, back in 16, if you put 25% tariffs on steel, and you're going to have more tariffs maybe rolled out later, reciprocal tariffs, et cetera, the market reaction would be probably different than it is today.
Yeah, it is remarkable. I mean, I don't know if you've seen this opinion piece in the Times by Summers, Rubin, Geithner, Liu, and Yellen. 18 years of combined Treasury Secretary experience, basically saying that Doge is a threat to democracy. No other Treasury Secretary in his first weeks in office should be put in a position where it's necessary to reassure the world you're going to make good on your payments. And their argument is that Bessent had to do exactly that. And yet it's not reflected at all in what stocks have done in recent days. Meanwhile, there's China. Retaliatory tariffs on U.S. goods now in effect. Let's get to Eunice Yoon this morning in Beijing with the latest. Hey, Eunice.
Hey, Carl. Well, China's counter tariffs are probably not going to have a meaningful impact on American business. Unlike President Trump's blanket tariffs, China's are targeted. Goldman Sachs has estimated that the Chinese levies cover $14 billion of U.S. exports to China, so that's only about 10% of the overall number of goods that the U.S. shipped to China last year. What is going to be important for us to watch, though, going forward is just how willing China is to expand its retaliatory toolbox. Already we saw a willingness, or at least a seemingly willingness, last week to target specific companies. So last week, when the Chinese were announcing the countermeasures, one of the actions was to launch an antitrust investigation into Google to blacklist PVH as well as Illumina, and then last December it also launched an antitrust investigation into NVIDIA. There are also reports that the antitrust watchdog is now mulling a investigation into Apple. So you have all of that, and then overnight, the Wall Street Journal was reporting that the Chinese strategy could be to expand this to include Broadcom as well as Synopsys. So the Chinese Foreign Ministry today responded to that, dismissing the report, but this is something that the business community here has been very concerned about as President Trump takes office, that the Chinese would be using this type of retaliatory tool to push back against whatever President Trump decides to do. Guys?
Meanwhile, Eunice, I don't know if you've noticed, but I mean, after a period of drastic underperformance, K-Web's up 10% for the year. S&P's up only 2%. I just wonder if there is a sense that money is flowing in your direction once again.
You know, from outside, I've heard that people say that the values of Chinese stocks has gotten so low, so maybe this is a time to get in. But from a Chinese perspective, a lot of investors are staying very far away from the Chinese stock market. Of course, a lot of Chinese cannot, unless you're really a professional, invest outside of the country. There are a lot of capital controls that make it difficult for people to do that. And in fact, what we're seeing here is many Chinese investors and just ordinary Chinese looking to open U.S. dollar accounts as well as investing into gold. So it's a little bit of an irony, actually, because the messaging in China has always been that that the dollar shouldn't dominate, that the yuan should gain an international status, but its own people are looking at the U.S. dollar thinking maybe that's a better investment.
Yeah, it does explain gold at all-time highs once again. Eunice, we'll talk with more frequency today, Eunice Yoon in Beijing. When we come back, a closer look at last night's Super Bowl, including what the numbers show about betting on the big game. We'll get to some earnings movers. We'll take a look at the week. It's going to be busy between a lot of consumer names. McDonald's, one example, Coke, Marriott, Shopify, Powell on the Hill next couple days, CPI and PPI. Stay with us.
CNBC. Live ambitiously.
For me, a great partner is basically the same as a great team member. For a brand team, it's very important to have all kinds of different people with unique skills in there, and to look for these kinds of people in different areas. People want to make a change, want to make a difference. I've worked with many different partners, and the essence is always about the collaboration, and it's about you as the partner or the client also giving just as much and being part of that team. For me, it's a 50-50 thing. It's not you spending money on X, Y, Z and then you expect something in return. It's always about that collaboration, that connection, and that takes time. People thinking I'm gonna, hire an agency or whatnot to give me this, that's not where the actual magic happens, in my opinion. So for me, what is in there? Yeah, drive, ambition, also human connection in the end of the day.
The power plays are here, breaking down the markets with updates and deep dives. What's moving now and what's next for your money? Sarah Eisen, Carl Quintanilla, Money Movers, weekdays, CNBC. A CNBC original exploring equality.
My quote since the beginning was, don't change yourself, change the game.
If you want to be more innovative, more creative, come up with alternative ideas to solving problems, you've got to be more diverse.
And LGBTQ rights and our acceptance are on the line all over the world.
We have something to bring to the table for the solution that we can find together in this fragmented world, and music is always at the center of it.
Real lives, real stories, only on CNBC.
run. They are aiming for a 16th straight session of gains. They've already hit all-time highs in terms of consecutive gains, I think with 13. Pretty amazing run. We know what it's done over the past 52 weeks, up more than, 54%. As Zuckerberg's found a way to pivot yet again.
Yeah, I think they were even up on the DeepSeek day, weren't they? Because everybody was saying they would be, yeah, exactly, the one beneficiary of more efficiencies in that world. And this comes, interestingly, as they have the performance culling this week, where people are going to be notified that due to performance standards, they will no longer be employed by the company and will receive severance packages. Coming from a position of strength, of course, but interesting for Meta.
Yeah, we talk a lot about retail traders buying the dip, but there's been no dip in Meta. It keeps getting bought. Let's get the opening bell here in the CNBC Real-Time Exchange. And the big board, it's American Healthcare REIT, celebrating its first listing anniversary at the NASDAQ. It's oncology company Novocure. As we get set for, as we said, pretty busy session next 5 trading days of earnings, and there'll be some hallmark names. We've already gotten McDonald's under our belt, but Coke's on the way, Marriott, Lyft, DraftKings, Wendy's, a lot of consumer names.
This is an exceptionally busy week. We're already halfway through earnings season, but we do have inflation data coming out Wednesday. You have Powell on the Hill on Tuesday and Wednesday. There are a bunch of bank conferences as well, so we're going to get a lot of likely guidance and a lot of macro commentary coming from CEOs at the UBS Financial Services Conference, which starts today and continues tomorrow, and then the Bank of America Financial Services Conference on Wednesday. Not to mention 13Fs are on a Friday.
Wow.
The deadline there. I was thinking about that as I looked at the TD story this morning, where they're doing an offering to sell their entire stake in Charles Schwab, raised $14 billion there, kind of disposing that remaining 10% economic ownership that they had, that they acquired back in 2020 as part of a deal there to combine their brokerage units. And now, given the kind of challenges that TD faces trying to replenish that hole, the multi-billion dollars worth of fines it faced related to its money laundering issues at some of its U.S. branches, they're kind of using some sell downs of Schwab to pay for that, essentially. But that's a big mover today. I believe Schwab was down about 2%.
What'd you make of the weekend? Elliott BP is interesting. Late last week, Ackman Uber.
Yeah.
I thought was interesting as well. If you let's see what Uber's doing this morning. Is it higher again? Because it was up quite substantially on Ackman's post on social media that he had taken a new position. There's the headline over the weekend. Elliott building a stake in struggling BP. We'll follow that. Uber's up again. Wow, Uber's up another 4%. This morning. It was up about 8% on that Ackman revelation that he had taken, what was it, 30 million shares?
30 million shares. Yeah, I mean, it's interesting because we were talking earlier this hour about how kind of the deal animal spirits were staying pretty hibernated so far this year, but from the activism side of things, and we heard this a lot from activist advisors toward the tail end of last year, that seems to be really ramping up, at least in January. I don't know if it has to do with politics necessarily, but perhaps it's more reflection of the market itself, because typically, Scott, when you see the broader markets at a higher level, you've got these mega cap names that are perceived to have limited downside, just given their size and scale when the market is doing well, but they're underperforming the market, perhaps, thinking more in the case of BP. That's kind of a nice way for an activist to have an entrance and get a pop on the day, or the day after, in Uber's case, that it's disclosed.
Yeah, Tesla's lower, by the way. I mean, there's been a pretty good debate among very well-known, money managers on the trajectory of both of those stocks relative to each other, right?
Relative to Uber?
Well, Uber versus Tesla, sort of full self-drive push that forward. I think conventional thought at the time in the market was, well, what's good for Tesla is bad for Uber. Tesla was up, Uber was down on that news. I remember Brad Gerstner sitting with me in San Francisco saying, well, we're out of Uber, and we've been long-term supporters because we just think that you know, if it's not him having his thumb on the scale, it is going to be a perceived threat to what Uber's doing. I just think it's interesting that Ackman sort of is on the other side of that, thinking that, you know, Uber is going to be a big winner no matter what Tesla does. And we said the stock's up, what, 12% in 2 sessions?
And Ackman, I mean, I don't know if he's necessarily a supporter of Musk, but they're certainly friendly on Twitter. I wouldn't call him a not supporter.
Oh, I think he'd probably tell you himself he's probably a supporter based on the posts that he's had relative to Elon. I don't think he would shy away from that in any way, shape, or form.
Right. Meantime, market is still trying to price in whatever Musk's involvement in politics is doing to the brand. It is a 26% drawdown on Tesla. And today, Stiefel does cut, they're still at 474, but they trim by about 20 bucks. Needham reiterates a hold, and they argued that the long-term growth drivers, FSD, robotics, Optimus, in their words, are more priced in than not. So it's interesting how much the street is going to be willing to look down the highway, so to speak, because the auto sales are already a minimal percentage of people's modeling.
Yeah, and I guess the tariff implications on auto manufacturing and how many of those raw materials will be more expensive as a result of what's looking like a potential trade war globally.
Interesting numbers out of McDonald's. Stock was up pre-market. They do miss by a penny. Revenue was light, down a little bit year on year. It was the comps. Biggest U.S. comp decline in 5 years and the 5th consecutive quarter of a U.S. comp miss. Interesting comments. The guidance out of the 8K had pretty healthy margin discussions, still looking at the high 40s versus 46 in 2024. But a lot of commentary about the lower income cohort, which they argue continues to see pressure. That's not a new argument for McDonald's, but the fact that they reiterated this time is going to make things interesting on the consumer front.
And they did have the value meal, and it looked like traffic was at least coming into their stores, but obviously at a lower price point with some of the value additions that they had. And then they had the whole E. coli thing, which I think a lot of people shied away from their stores as a result of some negative headlines surrounding E. coli exposure, which would be a rational move, I think, from a consumer standpoint.
The question is, what do you do, Carl? You know this company better than anybody, really, for the time that you've spent. Well, most, all right? Better than most.
Better than
is
us.
that better? The question is, what do you do in terms of discounting more value items to try and draw in consumers? I was reading one of the articles this morning where one of the analysts was questioning whether deep discounting was a winning recipe for sales growth. That was the analyst's words. But it speaks to what, you know, they're charged with. Like, how do you draw in more traffic? How do you get sales up and not cut your menu prices too much that it has an overall negative impact on sales growth?
I mean, it's really two stories on QSR. One is kitchen complexity, and we've seen Starbucks, for example, start to remove some menu items, try to get the process faster. Chipotle is really good at that already. But the other thing is McDonald's is often seen as a proxy for employment. So if you have a job to go to in the morning, that's obviously more odds that you're going to stop there on the way. And the jobs number, although, you know, we had a miss on Friday, still reflects an environment where we're kind of at full employment.
I have to also wonder, to that point, how much automation will play a role in the restaurant space? Have you guys been to the Sweetgreen down here at Wall Street recently? They've been almost entirely automated the making of salad at that Sweetgreen, whereby you go there, you put your order on an iPad, and then there's this whole big machine. It looks like you're on a factory floor that makes the salad. This wasn't the case, by the way, at the end of last year. They've changed it, and they have 2 people working there just to kind of make sure that your order is correct. I think it's still early days for this product. I don't know what it means for margins, but the idea of automation, if you're looking to, maintain margins and cut costs, is an interesting subject as it pertains to this space as well. I think
AI will be intelligent enough to know what you want before you get there and have it made next time by the robotics that you're talking about, probably no matter what quick serve a restaurant you're speaking about, whether it's McDonald's or what have you.
Right.
No, the facial recognition when you walk in. Oh, there's Picker.
Yeah, exactly.
I know what juice she wants today.
her iron levels
Cue
are
the
low.
robots.
She's adding that steak to the salad.
Just like Minority Report, yes.
Yeah.
How did those pants work out, Mr. Yakamoto?
Like, it's kind of creepy, but also, I don't know. That seems like something that would be nice.
What are McDonald's shares doing? Well, they're up. Well, they're up 5% now. That's the highs of the morning. yes, U.S. comps down 1.4. Total comps, though, were positive. I guess because international is starting to look a little bit better than it was. That seems to be the story, yeah?
Yeah, I think so. The other interesting consumer story is Disney. I don't know if you saw the story in the Journal over the weekend, looking at some internal discussions at the Mouse, where there is a level of concern as to whether they're locking out a certain portion of the classic Disney World, Disneyland clientele because they have relied so much on pricing.
So we have flights booked in April, but we have not purchased tickets yet. And I'm wondering if maybe we should just kind of wait it out a little bit if that decision ultimately. But I will say we were looking at ticket prices. They are astronomical for a family of four. Astronomical. So I know there are Disney diehards who will pay anything and they will go no matter what, but I can absolutely see a certain cohort of this economy being priced out for a very long time.
Meantime, we're watching big tech. These CapEx figures that we got last week from all the hyperscalers are going to start feeding into the supplier earnings, which we're going to get over the next few weeks. NVIDIA, Dell, Broadcom. NVIDIA is up 3%. This is going to take you almost back to the 50-day, which it lost earlier in January. News out of onsemi today. Revenue was a bit light. That was down pre-market. You mentioned OpenAI, and they did say that they're working further on their custom chip design, which then they would outsource to TSMC, which is having its own issues regarding the earthquake in Taiwan. Guidance will be at the low, they'll be coming to the low end of guidance, they say. That's a healthy rebound for NVIDIA.
Well, there was a positive call, too, on it today. Evercore says the DeepSeek sell-off creates an opportunity. Quote, we're buyers into earnings. Tactical, obviously, but, you know, there's a fair debate happening on the street right now as to whether the big beat and raise days for NVIDIA were over before DeepSeek, just because how can you possibly keep up? I'm not saying you can't beat and raise, but how do you beat and raise by that much continuously to keep the stock and the expectations where they have just been unbelievable? Now DeepSeek creates even more questions going in, but the stock sold off considerably and had a hard time recovering from that.
Yeah, I have to wonder, too, what it means for investment into China. There was that piece over the weekend, I believe, which talked about how the DeepSeek phenomenon has kind of reignited interest in investing in China. And this comes against the backdrop of everything we've seen with ByteDance and TikTok and all of the geopolitical issues. But you do have a incredible amount of talent in China, which is important for the tech ecosystem. And so just kind of what DeepSeek revealed about the potential for investing there in a way that really hasn't been the case over the last few years or so, is these tensions have simmered as the nations have decoupled as a result of just the competitive threat there, kind of reigniting the interest in investing in China. I thought was pretty interesting and pretty bold.
Right. Well, we were in a period not that long ago, a few quarters, where China was, quote, uninvestable, remember? And it was only about their stimulus, and every Monday we'd walk in here and we'd either be disappointed or confused about how they were going to react with public policy. But as we said, KWeb's up in the mid-teens so far year to date.
Yeah, and I think the DeepSeek engineers who created the AI model there, they were all educated in China. You know, there was this trend for a very long time that a lot of the tech entrepreneurs from China would come and get educated in the UK, in the US. They would go back to China and bring what they've learned back to the Chinese markets. In the case of DeepSeek, they were all actually educated on the mainland there and were able to still come up with, the model that was competitive and more efficient than or perceived to be more efficient than a lot of the U.S. alternatives.
Most AI-related stocks, since we're talking AI, are higher this morning. Dell, one of the better performers, up a little more than 2%. Vistra, Vertiv, some of the cyber security names are strong. Tech in general is leading, as you might guess today, if you look at the overall performance of the market. NASDAQ's up 150, about 0.75%.
The other thing that's of note are just industrials in general. Rockwell Automation, I think, was leading the S&P as they beat, and I think revenue was in line. Johnson Controls, JCI, gets an upgrade today over at UBS. You look at what new orders have done on ISM, reaccelerating. We've talked about what CapEx is doing and CapEx intentions, reaccelerating. So if there is going to be a broadening out of the MAG, I think, what was it, B of A last week called it the MAG 1?
MAG 1, Meta.
Because Meta is the only one that's outperformed since earnings. Maybe it bleeds into some of these automation stocks.
The MAG 1, not quite as catchy. You can just say Meta probably, but no, it's an important point. I think dispersion too, amid everything we're talking about from the macro standpoint. Dispersion is pretty high right now, which is a healthy sign for stocks. It's a healthy sign that investors are taking all of the macro headlines in stride and able to kind of extrapolate what it means for individual names. I don't believe, and Scott, correct me if I'm wrong, I don't believe that was the case the first time around back in, say, 2018, 2019. There wasn't as much dispersion. It was kind of the tide moving in conjunction with all of these different headlines, which may speak to your earlier point about the fact that the market is looking through them and focusing more on idiosyncratic factors of the day.
Equal weight, by the way, is ahead of the S&P year to date. So, you know, it hasn't only been a MAG 7 story, and in most cases, it's been everything but MAG 7, especially of late because of the earnings, right? Meta, as we talk about all morning long, was the only one to be up after earnings. And we'll see what happens with NVIDIA in a couple of weeks. But you have had a number of other areas, like Carl just said. Industrials up almost 5% on the year. Healthcare up better than 5% on the year. Materials up 5% as well. So it talks about what you guys are talking about in the sort of broadening of the market. A lot of things other than big tech are really sort of leading the boat.
Yeah. Dow, meantime, up 66 this morning, holding on to 60-50, S&P more or less. As we go to break, watch bonds. Not a lot of data or Fed speak today, but we'll get some as we move through the week. Of course, Powell tomorrow, Senate banking, and then House Financial Services on Wednesday are going to be the tentpole events for the week. 10-year still south of 4.5. Be right back.
CNBC. Live ambitiously.
Elevate your portfolio with JP Morgan's Equity Premium Income ETFs. Now with more flavors, global equities, US equities, and technology stocks. Discover now. Search JP Morgan Income ETFs.
Before they talked to Wall Street, they talked to John Ford and Morgan Brown. Closing bell overtime.
If you're watching CNBC, it's because you want to get an edge. You want to get ahead. It's our job to deliver that. My ambition is just to be the best that we can possibly be. More often than not, I kind of forget that the cameras are there, but when there's really a burning question, I'm thinking about what my mom would want to hear. I'm thinking about some of the investors I know who are watching. Those are the same questions we have. People always ask me what I want to do next, and I always think they're a little crazy. This is what I want to do. It's the best job you could possibly have.
One of the challenges for our industry is to get Europe to really pay for innovation and keep Europe competitive, especially in a world where the United States is prioritizing competitiveness.
The ongoing tariff discussions are creating uncertainties. As you can see in the current environment, the market is very sensitive to any positive or negative developments.
AI has created a major shift on the market. So AI is going to continue to drive the market in 2025.
In the age of digital disruption, get fresh business perspectives on the fast-changing world of tech, innovation and startups from one place. CNBC.com/technology.
Good Monday morning. Welcome to another hour of Squawk on the Street. I'm Carl Quintanilla along Scott Wapner and Leslie Picker here at Post 9 of the New York Stock Exchange. David and Sarah have the morning off. Market weighing more tariff headlines, a continued solid earnings cycle, and fairly subdued yields this morning with the 10-year still south of 4.5. Energy's carrying some water. Oil's up a full $1, but tech is also up 1%.
We're 30 minutes into the trading session. Here's the movers we are watching at this hour. Steel and aluminum related stocks jumping on fresh tariff talk from President Trump. The details and the fallout in a moment. And shares of T-Mobile are rallying. The company saying it started wide-scale testing of its satellite-to-cell service powered by SpaceX's Starlink. Those shares up about 2.4% right now. And we're keeping an eye on Meta shares. The company expected to begin job cuts as soon as today and coming off 15 straight days of gains, currently up about 0.25%. We'll see if they can hold on. More on this story ahead.
Meantime, as far as markets go, tariff headlines do dominate the weekend as investors work through an increasingly murky outlook for inflation and rates. Ahead, Morgan Stanley writing they now expect just one cut from the Fed this year. Our senior markets commentator Michael Santoli is here to break things down. I think B of A also said the window for cuts is basically shut, in their words.
For the foreseeable. And that's one of the things the market is, I think, contending with in this stuck period, where we've basically been in this narrow range. The S&P 500 has traded plus or minus 3% since the November 6th close. That's it. It's all you've gotten one way or the other. If you look at things like the equal-weighted S&P, if you look at the industrials, you look at the small caps, it's completely unwound whatever expected kind of growth acceleration impulse you might have gotten policy-wise, but the market's held in there because it's okay if the Fed's on hold, if the here and now economy is all right. No real alarm evident in credit markets, in the volatility trade, any of that not showing any stress. But I do think it's fascinating that it's become a much more selective market. And the stuff that's working is having to do a little bit more to keep the indexes supported. Only about 60% of S&P 500 stocks are really in a technical uptrend right now. A lot of the cyclical groups outside of consumer are kind of flagging just a little bit. I don't know that it's just tariffs. I think it's just that almost everything we're seeing that's front-loaded in terms of policy is growth neutral or slightly negative, whereas that kind of bedrock idea that it's going to be a growth-friendly policy mix and we're going to get some forms of tax relief down the road is kind of deferred at this point.
Yeah, which seems to be counterintuitive relative to what happened during President Trump's first term, where we saw tax cuts kind of right off the bat and tariffs followed that later. What does that mean for some of the Trump trades that had been operating on that same playbook that then had to kind of reassess when they realized that the front-loaded policies were the ones that were, as you say,
they've mostly fizzled. So, if you thought it was small caps, I mean, sell treasuries, maybe it was a Trump trade and the yields have gone higher, but they're well off their highs at this point. The market seems a little more sensitive to this idea that we might see more evidence of, housing market being pretty paralyzed right now, a little bit more of the lagged effect of the higher rates that we saw in the fourth quarter for the broader economy. That's part of it. I'm mostly just looking at the way the market behaves day to day. The last 3 Fridays, the S&P touched 6,100. Didn't hold it, ended up down on the day. In fact, each high was lower than the previous one. You don't want to slice it too thin, but the market's kind of saying it's going to take an extra bit of oomph to get us to the next phase higher if, in fact, that's what's waiting for us.
Meantime, I keep thinking of the desk notes that are, you know which ones I mean, saying they would write a tactically bearish note, but the flows right now are showing too encouraging.
They have been for weeks, especially kind of single stock retail flows have been remarkable. So there is this kind of source of adrenaline that's hitting the market in that way. I mentioned on Friday, Palantir traded twice as much dollar volume as Apple did. Okay, Apple is like, whatever it is, 8 times as big or something like that, maybe even more than that, maybe like 13 times as large market cap wise. The point is, we're just kind of turning it over that rapidly, and Palantir really is the poster child for that action. And, NVIDIA has kind of taken a turn in there as well. So there's just enough mega cap stuff working to keep things moving in that direction.
But you've been really disciplined at looking at dynamics like that and also on the watch for the silly stuff.
Yes.
Which I know you've been no fan of how quantum's traded or certain elements of crypto.
You see some eruptions in that direction. Was GameStop moving today because of a photo? Like that kind of stuff. Now, that can just carry on for a while, and that is just a little bit of like the bull market sort of venting off a little bit of that energy. I don't think it's one of those things where you say, oh, no, that we're drowning in the froth, because we're not. You guys have been talking about, we have no IPOs. You have none of the supply issues. Therefore, the demand for stocks, whatever form it's coming in, manages to be a net positive.
By the way, IPOs, the big one that we had, VG, is like way down from the initial pricing and then the initial open, if you remember.
That came on a disappointing offering as well, which was downsized from the original expectations. Both of the IPOs, the big IPOs that we've had this year, have had
I do think that the initial companies that hit the window are like, these are sold. These are owners or private equity that kind of needs to get that thing out there, as opposed to, do I have a great opportunity for you?
Oh yeah, I would agree with that. The stories are tough. I mean, they were both like declining top line, and no kind of real big growth driver in the future. Those are hard stories to sell in this market, especially.
Yeah. Mike, thanks. Talking a bit. Mike Santoli. The president expected to announce new tariffs meantime on all steel and aluminum imports into the U.S. Names like Cleveland Cliffs, U.S. Steel, Alcoa, and Nucor moving higher on that news. Let's get to Eamon Javers this morning with the latest from Washington. Morning, Eamon.
Yeah, good morning, Carl. We don't know exactly when we're going to see the president issue these new tariffs today. There is an event here at 1 o'clock this afternoon in the Oval Office where we might see the president on camera actually issuing these tariffs. We'll keep an eye on that. Here's what the president said yesterday about what he's exactly going to do today.
We'll also be announcing steel tariffs on Monday.
Tomorrow?
Monday, yeah, tomorrow.
What countries will those go on?
Everybody. Steel.
Including Canada, Mexico,
Yeah.
United States?
Any steel coming into the United States is going to have a 25% tariff.
What about aluminum?
Aluminum, too.
Meanwhile, Kevin Hassett, the National Economic Council director, was on CNBC a couple of hours ago, guys. There was this question that came up as Trump was talking on Air Force One yesterday. He said something about there being fraud in U.S. Treasuries, and a lot of people were immediately questioning, well, is he talking about the U.S. Treasury market, the debt markets? It looks like, and the guidance I'm getting from officials here is that no, what Trump was talking about in those comments yesterday that got a lot of people's attention was actually just this idea that the U.S. Treasury Department has been issuing payments that this administration has found were improper. They were not issuing payments correctly. Here's what Kevin Hassett said about that a couple of hours ago here on CNBC.
The Treasury Secretary has found that the controls for spending of the previous administration were unacceptable, that they were sending money out without knowing where the money was going. They were sending money out without flagging, what it was for. They didn't check before they sent the money out whether it was appropriated.
So, guys, we'll wait and see when we get these announcements. But what we're expecting as of right now is 25% tariffs on steel and aluminum coming from anywhere in the world into the United States. And then also these reciprocal tariffs that the president's been talking about in terms of tariffs on countries that have tariffs against U.S. goods themselves. So we'll wait for that announcement and see when we get the actual specifics. Back over to you.
So, Eamon, you look at a list of who is importing the most steel by origin to the United States, and Canada, for both metals, is above and beyond the biggest. For steel, it's $11 billion. For aluminum, it's $9.5 billion. And Mexico for steel is the second biggest importer. And I have to wonder, given what we've already seen with those two nations in the trade war, if there's a potential for a rollback on this as well, given that they cut a pretty quick deal.
Yeah, I think if you look at Donald Trump, he's a hardliner on all these issues, but he's a flexible hardliner. I mean, this is a president who's willing to take yes for an answer if he can get some kind of leverage and some kind of win from that leverage. So I think you're right as you look at that. Is there something that those countries could do to sort of, wriggle out of this by offering something to this administration? We don't see any indication of that yet necessarily. But with all these things, they're in place until they're not in place. And so you have to watch all the negotiations that are going on behind the scenes.
Meanwhile, Eamon, we thought maybe we'd get a little clarity on budget over the weekend. It looks like we're going to have to wait a little bit longer. and this two-step between who we watch more, the House or the Senate, and then these ongoing headlines about to what degree they would be willing to dip into things like Medicare benefits.
Yeah, look, the president has said that he doesn't want any kind of benefits that go to the American people to be changed in any way. But, you know, you've got a lot of people who are very excited about cutting spending. And if you want to cut spending, you know, those social benefits are one of the places that you might have to go. So far, though, what this administration, what Doge has been saying publicly and what Elon Musk has been saying publicly is what they're going after is just going to be waste, fraud, and abuse. So any kind of improper, unauthorized payments that have been going out, you know, sort of heedlessly from the federal government is something they're going to target. You know, as for the strategy up on Capitol Hill, that's still all TBD as well, Carl.
Eamon, thanks a lot. Appreciate it. Eamon Jabbers. As we do head to break, here's our roadmap for the rest of the hour. As President Trump considers more tariffs, China's own tariffs go into effect today. Is China better prepared this time around?
Plus, one Super Bowl ad causing big controversy and what weight loss drugs have to do with it.
And fly, Eagles, fly. The Philadelphia Eagles blowing out the Kansas City Chiefs last night. Super agent Drew Rosenhaus will join us to talk about it and this ever-changing sports investing landscape. As Squawk on the Street continues after this.
In a world of uncertainty and disruption, how will your investment stay resilient? We've been navigating change for 125 years, always looking forward, anticipating risks, and trusted to manage over $1 trillion in assets worldwide. Solving for the needs of investors today and tomorrow. That's the power of Nuveen.
We speak to the world's most influential people.
I love what I do, and it means so much to me.
From celebrities.
When we took a break, I thought that was the end of it.
To the C-suite.
I started on the factory floor, and here I am 35 years later.
The economist and author Dambisa Moyo. A lot of boards, many of the ones I serve on, went back to the drawing board to say, well, we need to do better here.
He turned a dream into a global brand.
Join the conversation on CNBC.
I started investing a little money for my dad, and I got bitten by the bug. In today's world, I would urge a lot of people to get financially savvy. Squawk Box and CNBC, it is my home. It's the greatest job in the world.
One of the challenges for our industry is to get Europe to really pay for innovation and keep Europe competitive, especially in a world where the United States is prioritizing competitiveness.
The ongoing tariff discussions are creating uncertainties. As you can see in the current environment, the market is very sensitive to any positive or negative developments.
AI has created a major shift on the market. So AI is going to continue to drive the market in 2025.
digital disruption. Get fresh business perspectives on the fast-changing world of tech, innovation and startups from one place. CNBC.com/technology.
Ambition doesn't always look like you think it might look. I can remember reading The Economist on my lacrosse bus trips in college. I've just always been super fascinated by what's happening in financial markets and what is that telling us about where the world is going. I want to democratize access to that high-level information and help explain to every single person out there watching why what's happening in these complex markets matters for their lives today and in the future. That's what drives me. I love being part of this.
One of the challenges for our industry is to get Europe to really pay for innovation and keep Europe competitive, especially in a world where the United States is prioritizing competitiveness.
The ongoing tariff discussions are creating uncertainties. As you can see in the current environment, the market is very sensitive to any positive or negative developments.
AI has created a major shift on the market. So AI is going to continue to drive the market in 2025.
we've been watching big...
Okay, Carl, thank you very much. Welcome to the Halftime Report. I'm Scott Wapner. Front and center this hour, the tech trade. That sector remains the only negative one so far this year. We will discuss and debate it with the investment committee and a big-name investor. Speaking of 13Fs, making some really interesting new moves there. Joining me for the hour today, Joe Terranova, Amy Raskin, Jim Lebenthal, Rob Sechin. We'll show you the markets. Despite talk of tariffs today, obviously, we are green across the board. It is the NASDAQ that is leading today. Technology is doing quite well. I do want to focus on these Tepper 13F. David Tepper already filing his 13F earlier this morning. We talked about it earlier on Squawk on the Street. Notable are the increases in position in several of the China internet names. Alibaba. You know, Rob, I know you own Alibaba, so I'll start with you. I think this is just simply a case, from what I understand, of thinking that these stocks, many of them just got too cheap. And if we were to show, for example, I can throw up a 6-month of BABA, it will show you sort of what I'm talking about in a chart, which tells the story better than words. October, the stock was around 117. There you go. And you see that. And then in, you know, early 25, it was down to 80 bucks. Tepper looks at that and is like, I told you guys on CNBC already a few months ago how much I like China, and I don't think that story has changed at all. Now the stocks came down a lot, so I'm increasing my positions in a lot of names that I had.
Totally agree with him, frankly, Scott. You know, this is the name BABA that we added in January, I believe, of 24, so we've owned it for a bit. I know David was on talking about it in September, and I love the fact that as these stocks have re-rated since September, that he's bought more. You know, Chinese tech stocks, not just about being cheap. They've been cheap for a long time. It was about geopolitical risks, low relative growth rates, regulatory headwinds, big underweights from a positioning standpoint. That is what sets them up for periods of outperformance. There's opportunities in China, but I think, like Dave, we want to be selective. We own Tencent, we own Ping An, both of which we talked about and bought on the show. But I think this is an example of getting quality tech exposure outside the U.S. And when you look at a company like BABA, this is a name that resembles very much the business of Amazon. They dominate key secular growth industries. They're of e-commerce, they're in cloud computing. They trade at 1/3 the valuation of Amazon, which we happen to own too. But this company, despite being a relatively modest grower, is one that you have a huge margin of safety. And I think there's just peak pessimism around tariffs and around China. So this is one where we agree with Dave. That said, these things re-rate very quickly, as we saw in September. So we will see. And if the tariffs end up being more, more bark than bite, I think these are names that you can own, and you can certainly own them for a long time.
A lot of these stocks tell a very similar story through the chart. Baidu's another one, which you can pull back to 6 months as well. You can see a spike in the China names when he came on and said buy everything, ETFs, names, whatever. And then you had to come down in the share price, Joe. And you could see then that this became an opportunity that was too good to pass up. The KWeb was up a bunch today as well. Tepper tactical as good as anybody in that regard. 13Fs can be dangerous because they are backward looking. Obviously, this is at the end of the last quarter. But I understand this to be the real deal right now, too. That he likes these plays. They just got too cheap.
I think the inflection point was the middle of September last year, where we heard that finally Chinese policymakers were going to be introducing aggressive stimulus measures. And it was at that moment where you saw these names begin to rally. Look at JD's performance since then, up 57%, BABA up 31%, Baidu up 11%, PDD up 19%. And I also think what happened is you had a lot of outflows from India, INDA. Look at the ETF, down 13% from the middle of September. MCHI, the China ETF. You've got that one up 23%. So you had that negative correlation trade that has continued geographically. It's been the last several years. When India does well, you see capital moving out of investments in China. Now you saw the reverse of that. I think it was a major inflection point. I know our exposure is in Yum China. A week ago, I said to you, I was a little concerned. I didn't think I saw the momentum being there. They reported earnings 2 days later, and clearly that reignited some positive momentum. So I think they're in the right place. If you were to ask me of the 4 names that we're talking about today, which one do I like the best for further appreciation, that would be BABA. I think it's very close to returning to its high.
Aim, there was, the narrative had become China's uninvestable for many.
Yeah.
And it's, it's like Tepper trying to play chess when others are trying to play checkers. And your trash is my treasure.
Yeah.
Is it investable now? I mean, because of the advances in AI, BABA has an AI model,
Yeah.
Which it suggests is pretty good. DeepSeek making us all think about what's happening over there as it relates to AI and the competition that exists. Is this the moment? Again, if you missed it the first time when Tepper told you to do it,
Right.
do you follow his actions and do it yourself?
I'm not going there, actually. And I don't think it's not investable. My issue with a lot of Chinese companies is that they're not really run for profits. They're run sort of as extensions of the government, and that makes them a little bit more risky and a little bit more volatile when policy changes. That said, I think we are very overweight ex-US. So we're very overweight Europe at this point. We have a big position in Japan. I do think the rest of the world, relative to the US, is very inexpensive, China included. Obviously, Europe has more exposure to the Chinese economy. So if you do get a big stimulus, that's going to help those companies in Europe. So I do think, I wouldn't say that they're uninvestable. It's not where we're choosing to go right now.
I would tell you, Jim, the other interesting moves in the 13F that we're watching from him today, Tepper, cut Amazon by 19%, cut Meta by 21%. We know that Meta's been on this torrid pace, all of you. We've talked about it every day. Meta's trying for its 16th straight day up. That's the longest streak of any of the Mag 7 ever. $270 billion in market cap since January 16th when all that began. Rob, you own Meta. I know, Joe, you own Meta. But what about this taking positions in mega cap down a little bit as you increase the exposure elsewhere within this universe?
I think it's all a question of degree, Scott, and I agree with it. And you saw me a couple of weeks ago trim Oracle and NVIDIA, for that matter. These stocks have had home run returns, so there's nothing wrong with taking a little profit off the table. I still own positions in all of them. And I think, if you look outside of tech, you mentioned the lackluster performance year to date of tech. There's a lot of other sectors of the market that are doing really quite well, and I think will continue to do well simply because as you looked at projected earnings growth through the rest of this year, the Mag 7 and the other 493, their growth rates converge by Q4. Now, this is a projection, and things may change, but they literally converge to pretty much the same growth rate by Q4. And when you consider the weightings of the Mag 7 and the lack of weightings in the other 493 stocks, there's a case to be made for the rally continuing to broaden. By no means am I saying Mag 7 are dead, otherwise I wouldn't own them. But I think it's perfectly reasonable to trim these stocks and look for better opportunities elsewhere.
That's what Adam Parker is suggesting today. Says sell some Mag 7. We're changing our mind, and we believe lowering exposure is prudent. The high beta and increasingly high capital intensity combined with the elevated valuation of the Mag 7 is, in our judgment, an increasing cause for concern. Everybody's got Alphabet. A lot of you have Microsoft. Joe, you sold it in the rebalance. Amy, what about that? Is it time to sell some of the Mag 7? Is it time to change our minds and lower exposure there?
Yes, we've been underweight the Mag 7. I think that is the right call. I do think the capital intensity is going up. The free cash flow numbers are looking worse. They're looking much worse than the earnings growth, and everybody's still focused on the earnings growth. So, look, these names are over-owned. I think as Jim said, we still own a lot of them. We're underweight pretty dramatically as a group. Amazon's the only one that we're a little bit overweight at right now. But I think there are other opportunities and other places to look in the market. Rob, JPM says Amazon's reiterated today their best idea. I said everybody owns it. You're hard-pressed to find many negative calls around any of these names. If you take Apple out of the mix, we know about the
I don't know, over the last month, a bunch of downgrades that those have gotten, but that's about it. Most of these other stocks still remain well loved by a broad swath of analysts on the street.
Yeah. I would say, you know, when you look at companies like Meta, I would not be surprised to see some give back in price performance. Know that this is our largest overweight of the Mag 7 by double. Okay, so here we are owning it. We have enormous price performance. We're up 500% since we added it in December 22 on the show. We're not selling any of it, but I think you could see some give back. I think it's about haves and have-nots, Scott. So when we look at where we would be buyers, even though we're underweight, it's NVIDIA and Amazon because they trade at slight discounts to where they have traded historically from a price standpoint. And when you look at what's happened, Microsoft, Google, Amazon, all traded lower on weaker cloud revenue and higher CapEx plans. In saying that weaker cloud revenue is about capacity, inability to keep up with insatiable demand. That is why you want to focus on those. I think really expensive things like Tesla, we don't want to go near. Microsoft has basically been dead money for the last year. That's why we're neutral. Apple, we trimmed at the end of last year on that major price performance that we saw. Google's still cheap, but these companies have huge CapEx and operating profit is up a lot, but free cash flow is only up minimally because they're becoming capital intensive. So if you focus on protecting yourself with price and owning the names that are relatively cheaper, you're going to be fine here. It's the expensive stuff you have to be careful with.
Wolf, though, Joe today asked the question, are tech's best days in the rear view? They say the path of least resistance for the group is to the downside in their mind. So I got Parker and Wolf saying, okay, lighten up, or at minimum, think about these as the best is maybe behind these names for a little bit.
I don't know. I want to use the word moderation. I think it's moderation in terms of price appreciation, moderation in terms of the revenue growth. I think that's the right word. And when you use the word moderation, you understand that, yes, these are core holdings in a portfolio, but the degree to which you own them is what you should be questioning right now. So David Tepper selling off some of these, I think that's proper risk management. And I understand that we've seen evidence here in the most recent earnings report that's the right thing to do. You really don't have strong reaction after earnings for the majority of these Mag 7. Now,
the only one you did was Meta.
Yeah, and we're waiting for NVIDIA. So I could be wrong on that because NVIDIA could turn around and appreciate significantly.
Well, I mean, Amy, NVIDIA, Evercore today says the DeepSeek sell-off was an opportunity into the print. They want a tactical outperform. They do report on the 26th. So you got to wait a little bit. By the way, from the 13F, I saw that Tepper increased NVIDIA position by 8%. Little small bump up. And, you know, that stock has obviously been in question. I know you laugh because it's a small bump up.
8%.
Well, for a big fish. Yeah. For a whale.
Right. I think NVIDIA's quarter is going to be fine. You know, you saw the CapEx numbers from all of these guys, and they were up huge, and that's going to be to their benefit. But from a long-term perspective, would I be adding to NVIDIA right now? Probably not. You know, we've owned it forever. We had clients who would kill us if we sold it at the end of last year. Those same clients are saying, you know what, you can sell some now. It's funny how when something goes down 25%, people are less in love with it, and that becomes a little bit of a self-fulfilling prophecy. But look, NVIDIA is a great company. They have a great position. The question in my mind is all about valuation. Should it be a $3 trillion company at this point?
Okay.
And I think that's a fair question.
So if not tech, then what? Right? If you say you're one of the few on this show who's been underweight tech for a while.
Yep.
If not that, then what?
European banks look great. I mean, they've done great. Europe's done better than the U.S. year to date. There's a lot of names over there that we like. Healthcare has been working and much cheaper valuations. We like energy. It's also been working year to date, kind of surprisingly given the policies of the Trump administration. But we do think that they're very cheap, and they, you know, for the most part, we're going back to a fossil fuel world, and that's going to help these energy companies. So there's a lot of places in the market that we like.
By the way, you did trim another one of your big winners. This is not the first time you've trimmed this name. It's a quantum computing stock, IonQ. We talked about it on numerous occasions. This stock had a great run, and I know our viewers, certainly some of them, because I've heard from them on social and whatever, followed you, they bought,
Yep,
and they made a lot of money.
Yep, it was a great, we bought it at $12 or $13. It went up to 50. Then we had the Jensen warning about quantum. It fell back to like 30 or even the high 20s. It came right back into the low 40s. We've been trimming just because it's a very volatile name. This should be a relatively small position in portfolios. There's a lot of upside if it works, but it is a risky stock. So at the $9 billion market cap, we're just trimming it back. But long term, this is a real company. $100 million of bookings last year, real customers. So we like it.
Yeah, well, you have a number of other moves that we'll get to throughout the show. Just